morning, good afternoon, and good evening to the rest of you. Welcome to another episode of Bitcoin Magazine Live. I'm your host Q, coming to you yet again from my mother's basement, and I'm joined by my co-host P. How goes it, P?
It goes fantastically as always. I'm ready to go, excited for today. I've got a dry ice cream cone with nothing in it that I'm scarfing down on. I've got a banana, and I've got a ranch water sitting next to me at noon. Let's fucking go.
What happened to the tie?
Oh, yeah. For those who were not participating in the call earlier before we started, I was trying and failing fucking miserably to try to tie a half Windsor knot with this glorious orange tie because I thought it'd be funny. Couldn't do it. It's been too long since I tied a tie.
So I tried my best to record what was happening because it was truly comical watching Chris try to explain to you how to tie a tie via video chat.
Oh God, it was a disaster. I'm not gonna lie to anyone here.
But props to Chris.
My mouth to God's ears.
Kid knows how to tie a tie.
He definitely does.
Was definitely in a fraternity tying a tie or two while he was hungover.
Yep.
But we got a jam-packed episode for you all on this Thursday. We'll kick it off shortly with some news and notes. We'll be joined by market analyst Joe Consorti later in the episode. And then, of course, we have Jimmy Song coming in, and we'll be just rapping and asking him what's been grinding his gear. But let's kick it off with some news and notes.
Let's do it.
Do we want to go with I hate saying it like this, but I guess the biggest story on Twitter, at least.
Do you want to save it for the end? You want to do the other ones first?
Let's save it for the end. I mean, it's
pace yourself, Q. Pace yourself.
Sorry, I'm trying to sprint before I can crawl.
That's right.
We'll go to Core Scientific. They enhanced liquidity through $100 million with committed equity facility. I need to not Ron Burgundy this stuff anymore, guys. I'm sorry.
It's like me trying to mute myself and unmute myself and failing every fucking time.
It provides the right without the obligation for Core Scientific to sell up to $100 million of its common stock over 24 months to B. Riley Principal Capital. Essentially, this sounds to me like a line of credit. This is great. Maybe this also could just be Core Scientific kind of yet again fumbling a little bit. I'm going to call them out because I was definitely a Core Scientific bag holder. And you know what? A lot of other publicly traded miners were much better prepared, I think, for the ensuing downturn that got everyone to have to liquidate something. But Core Scientific really, I think they liquidated close to 80% of all their Bitcoin holding.
Woof.
So, and that was the most of any of these publicly traded miners. So due in large part because they were taking out far too many loans. They were, as the saying goes, caught out in front of their skis.
Yeah, I think what they're going to, this is just me speculating. I think they have the facilities set up for a lot of them. I believe what this loan is basically doing is they're trying to buy a bunch more ASIC miners that are super cheap profits. Super cheap prices. We were talking to JP Barrick last week, and he was saying, how cheap S9s are. They're not going to be getting S9s. They're going to be getting S19s. But S19s at one point I was looking at Kaboom Racks, which is a Telegram group where you can look at ASIC miners. I think the S19s were going for $14K. They've now come down to about $4K to $3.5K, like a $3K for an S19 or something like that. They're off market, so they're probably getting better deals of bulk orders. But still, even when the off market prices are for 3.5K for brand new S19s, maybe lightly used, they're a big miner. They're trying to take advantage of this to get more mining rigs because they obviously have a facility, they have power. They're just trying to get more machines up and running. Obviously, they're pinching closer to the margins with the price being down. But if you start deploying more capital for ASIC miners, if the price goes back up like we expect, they're going to be in a very good position to capture more hash rate.
Very interesting. You guys know what this is?
No.
That is a CPU?
It's an ASIC.
Is it?
Yeah, it's from way back in the day. That's what they used to
It
look
looks like a computer CPU. It's much bigger than a computer one, though.
Yeah.
That's cool.
Did
it work?
I've touched it with my greasy meat fingers, so definitely not. But it did at one time.
Let's hit the next story. So Compass Mining. Sorry, I can't say it with a straight face.
Can't be done.
I'm an asshole. Compass Mining can't do it. Announces 75 megawatt site expansion with Compute North. I didn't realize Compass Mining had any money to do anything with. I'm sorry, I'm just being a dick.
Yeah, it's very interesting when they're having all those issues. Maybe this is under new management. They're trying to keep the business alive by doing a new deal. And I don't know if people are obviously requesting their miners back and stuff like that. I don't know how they're going to fill the facility. And that's not trying to be a dick move. But like, I know people are very flustered and frustrated. Obviously, they lost all of their miners to Russia, which is now owned by BitRiver, I believe, because of the sanctions. They weren't able to get them out of the country. So like, and then people like I know I have friends that have miners with Compass, and it's very difficult to get the miners back right now. And they're like, oh, they're going through a lot of changes, but I don't know how they're going to fill the facility. And I kind of feel this is a mean thing to say in speculation, but like, I don't, maybe they have money coming in or a new investment to try and get more miners to fill it, but I'm not sure. I don't know where this is going to come from.
Yeah, it doesn't look good.
I mean, like, I'm just trying to be a bit of an asshole here, but like, seriously, how is anyone still trying to do any business with Compass right now?
Embrace the darkness, Q.
I mean, I think that's a perfect segue to the story that I wanted to talk about. You know,
we got one more. We got one more that like leads into it. Do you want to do the ones?
Keep us in line, Chris.
The institutions that have liquidated their Bitcoin holdings.
Well, no, I wanted to do that after. I wanted to kind of. I want to do that after. I do like that chart, and I do want to show that chart, but I want to do that after.
This is how the sausage is made, everybody.
Because essentially, what I want to say is fuck Elon, Elon Musk, and like we'll get into it all, and I'm just gonna repeat what I said last night in the spaces, but here's the goddamn truth: Bitcoin doesn't give a flying fuck about Elon. It doesn't care that Tesla sold 75% of its Bitcoin. It doesn't care that Elon still has not reaccepted Bitcoin payments for Tesla cars. It does not care that he pumps Doge whenever he damn well pleases. Bitcoin doesn't care. Bitcoin doesn't care that China banned mining. Bitcoin doesn't care that China says you can't transact in Bitcoin. Bitcoin doesn't give a rat's ass that the state of New York wants to do anything to inhibit mining. But also in the same vein, Bitcoin doesn't care that Bitcoin Magazine exists. Bitcoin doesn't give a shit about any of it because Bitcoin just operates. There's no marketing team trying to push it up. There's no business entity behind it. To every 10 minutes, a new block is going to be mined, whether or not Tesla is holding their Bitcoin. So we'll get into the nuances of it all, but that's just... I think it's comical. Like, it's fun to make fun of Elon because you know how sensitive he is. And he's like probably crying in his little room about the fact that everyone's calling him lettuce hands. Like, I genuinely believe Elon Musk like actually cried by how much he was bullied by Bitcoin Twitter last night. But ultimately, like, lettuce hand Musk, who is absolutely liquidating some of this Bitcoin to pay off child support and like also help out his father's, his like newest half sibling from his father, because you know it's the Musk family. They just have children, they just procreate, and so like you have to pay for procreating, I guess. I don't know. Worth noting and reminding everyone, like, he didn't liquidate everything, so it's going to be interesting. It's going to be interesting to see what what Tesla does with Bitcoin. It still has 25% of on the balance sheet. I believe that's somewhere in the tune of like $300 million worth of Bitcoin USD. So they're not out of Bitcoin. They did this, quite frankly. Chris, you pointed this out, and I'll let you like really, you know, give the numbers of this, but they weren't profitable last quarter. That's just the long and the short of it. Chris, if you want to give those exact numbers.
Yeah, so the exact numbers on their cash flow statement, it says that they $922 million cash flow bonus from the Bitcoin sale. Their cash flow change was $847 million. What does this mean? That means if they did not sell their Bitcoin for $922 million, they would have been negative $750 million in cash flow. So with the sale, they were positive $847 million in cash flow, but it's very interesting. Yeah, without the sale of Bitcoin, they would have been minus $75 million.
Yeah, I was about to say, I was like, not 750, 75 million.
Oh, did I misspeak?
The first time you said 750, but yeah. Fun fact, this is not the first time Tesla has actually done this. It was Q3 of 2021 when Tesla actually would have had negative earnings had they not been selling carbon credits. So this is a play that Elon and Tesla have used plenty of times. I frankly don't believe anything more nefarious other than the fact that they're just trying to make it look like they're still profitable. That's genuinely what they were doing with this. This was not they don't believe in Bitcoin. This was not like he's going it all in on Doge or anything like that. We had this conversation in the spaces as well, and I brought this up countless times on this show, and I only feel more and more validated when I see things like this happen. But there are financial people who work at Tesla who make calculations on what is the best course of action to invest their capital funds. Elon does have a say, and if he decides, hey, I want to do this with our money, like they do that with their money. But these treasury people could very well have created, much like I've said, that there are these private hedge funds that have been trading Bitcoin, and that has been a big driver as to why you see this correlation between the equity markets and Bitcoin. They've calculated their own beta, or they've assessed the market and they see that same correlation, and their expectation is the market's going to go down. So if we sell some Bitcoin right now, at least we're going to harvest a loss, but at least we can like temper what the bigger losses may look like. And look, they got out at an average price of $29,000 Bitcoin. Bitcoin right now, what does it say on the block clock?
$23,140.
Like, we'll point out the fact that there's a $6,000 differential right now later once we pull up that waterfall chart, because then I can do the math of like how many Bitcoin they sold, that they can now just like go back and buy even more Bitcoin as a result. So we'll see. I don't necessarily think that Elon is now going to just go like ape into Bitcoin all of a sudden. I think everyone is building a cash position because there's a general sentiment that the recession that we're living through has not yet been told to us by the powers that be, which also I want to put a pin in that notion, the powers that be that tell us when a recession happens, because I learned something very interesting yesterday about that. I open it up to either of you as well now, though. Just, do you think there was anything more nefarious or anything at all beyond just the fact that Tesla needed to make it look like they were making money last quarter?
I don't think so. I think this is, I look, everyone is shitting on Elon now. When he first announced that they were purchasing Bitcoin, everyone, including myself, was like, yeah, this is it. Fucking Elon Musk is in. Like, let's go. And then everyone, including myself, was disappointed when he was like, when he made the announcement that they were moving out of Bitcoin. It really annoyed me that he gave like bullshit reasons. It also, of course, annoyed me to no end when he was promoting Doge. But like, he's doing his thing. He's trying to make money. He's doing some of that stuff is incredibly dumb. But as you said, Q, like these are just the trials and tribulations that we go through in the world. And it's only interesting because it's Elon Musk and he's a notorious troll. But I think it's totally his right to sell Bitcoin, to buy Bitcoin as he wants. And it is interesting, but to your point, that's not Bitcoin. We're going to be fine.
Yeah, I think it's very interesting because he did on the earnings call, he was like, oh, we sold it, in order, his reasoning for selling, he claims, was because of the lockdowns in Shanghai. I know there's been a bunch of lockdowns in Shanghai and China. I think he was talking about the most recent one. It happened a few months ago when they did the sale. I think he claims it could be that. I think that they're trying to be in a cash position to either buy assets. I definitely think, to Q's point, they definitely did it to prop up their balance sheet for Q2 earnings. Like, there's no way to avoid that. Then even another thing, he said, oh, I didn't sell any Doge, but like, I know that they sold hats and shirts and stuff with Doge. But when I looked at the numbers, I think they sold like 10 hats and like 100 shirts. So it's like, okay, what, like, oh, we didn't sell our Doge holdings, but what is that? Like $1,000, $2,000, if that. I just think that was stupid. I will note one thing, and this is nothing nefarious. Well, not nefarious at all, but when Twitter, they have one of the best law firms in the United States. And when they were doing the dealing with Elon Musk, obviously it was very back and forth. We're not selling. We're trying to offer him a board seat. Then he can't buy the company. When Elon went into the offering and signed the initial paperwork to get that rolling, there was many caveats on both sides about who could back out of the deal, what could constitute backing out of the deal. Elon Musk was trying to back out of buying Twitter. In one of the caveats in the deal, a court made a ruling 2 days ago saying that he has to go through with the deal. He was claiming that because of bot accounts, he was unaware of this and it's fraudulent. Twitter's like, we don't make bot accounts. Like, people can use the platform. We're trying to get rid of bots. And like, basically there was a loophole that like, Elon right now, unless there's fraud with Twitter, which is a possibility, but as of right now, he still has to go forward and buy the deal. Other people are saying, obviously, this is Tesla's balance sheet. It's not related. But when Elon is the largest shareholder of Tesla, he's trying to prop up the earnings that if in case he gets hit with being forced to buy Tesla, obviously, or to buy Twitter, that he needs the stock price to still be high, otherwise hitting his net worth. I don't know. That's just kind of what some people are saying on Twitter for sure. But as of right now, a few days ago, the judge ruled that he still has to go through with the purchase of Twitter. Obviously, the lawyers are involved, so this is going to be, I assume, months, if not years, for this to go through.
Yeah, I mean, look, this is all a narrative game, right? And that's that's in every market, and certainly in companies that are connected to the broader equities markets that are publicly traded. These earning calls, the things that are messaged during those calls are not designed to communicate truth accurately. They are designed explicitly to either pump the price and to keep shareholders happy, or to mitigate the potential for people to draw negative conclusions from, what is empirically bad information. And that's just the reality in any earnings call. Michael Saylor does this, like everybody does this, right? And that's not to say that they're the same. They're totally different people. But I mean, Elon Musk is a very effective troll. He's an extremely effective marketer. I mean, the whole thing with like Neuralink, like if go and watch the Neuralink presentation that he did, I think it was like a year and a half, maybe 2 years ago, probably more at this point. But it was insane. It was basically him, they brought a bunch of pigs in, they demonstrated literally decade-old technology, and he was like, look, you can see the pig, it's happy, it's eating. And it was like eating food, and like there's like musical notes coming out, which is like, it's just insane. It's all just like promotion. It's just, I don't want to say pump and dump, but it's like pumping stock prices to keep shareholders happy. That's just the way the world works right now.
Yeah, I will add to that. It's all a narrative game. I mean, all companies, Apple, Tesla, Microsoft, any company, they want to look like they're the good guys. They want to look like they're helping people. They want to look like they have a great product. I mean, it's part of the game of, I guess we can call it capitalism or markets or whatever. To your point, isn't even broader than that. Isn't that what Jerome Powell does? I mean, we're in 2 weeks, we're probably having the most watched FOMC meeting in history. And it's going to be Jerome Powell coming out and being like, are we raising 75 basis points? Are we raising 1 basis point or 1 whole percentage point? Are we reversing it? So to your point, I mean, it's all narratives. Our economy is literally a narrative. Like, you've got politicians saying we're not in a recession. The president of the United States saying like, this has been a great recovery, where people are like, hey, I'm losing my job. Inflation's going rampant. So it's just insane. Yeah. Anything you want to add there? P, you're still muted.
Yes, I want to contribute to this conversation. I'm sorry.
Wait, before you say that, because I do want to get your thoughts on, one thing that Jumper DCS World just said was, they didn't want him to buy Twitter. Now they're forcing him to. What happened there? Why? Like, what are the ins and outs of why they were trying to resist his bid or whatever the fuck you call it, and then now they are forcing him to?
Do you want to take this, or do you want me to?
Yeah. I mean, I'll start and feel free to chime in. Here's a little bit of what I genuinely think happened with the facts that were made public. So what was made public was there was pushback initially by the board for this quote unquote hostile takeover. However, I think through a deeper analysis of what the market potential was, I think the board was saying that because they wanted more money for their shares. And then what they very quickly realized was, oh, the market's actually turning sour. And what Elon is actually willing to pay is a premium on what the price of Twitter should be. Like the price of Twitter is propped up just like the price of every other tech stock right now. And if we think all tech stocks are going down, so too will the value of Twitter. So I think there was some posturing going on there. I think it was genuinely a negotiating tactic.
But nobody talks about that. So much fucking posturing. Like Twitter was like, people were like, oh my God, this is an attack. Like we have to resist the attack. And then suddenly they're like, all's cool. Like let's fucking go. And there's no acknowledgement of that disconnect.
And I will explain my rationale for this. And there are two main things that really, I think, explain my logic in drawing that conclusion. And the first is that one member of the board, the Saudi prince, is actually part of Elon's new group that is acquiring Twitter. So one board member is actually returning and more or less not leaving and expanding their sort of stake in Twitter, which only to me confirms like, oh, okay. So you not only have the support and are working with someone on the board, they're expanding their stake. So there's like this very fine line of, hey, I also have to now pay for more shares. And like, I'm not selling my shares. So I'm not willing to go above a certain level now. So that's actually why I think some of this information was getting leaked, was because there was pushback internally when you have someone like Jack Dorsey come out and say, Elon is the next iteration of Twitter. Like this is what I genuinely believe would be best for the application that I created, which I've never been given a reason to not believe Jack Dorsey's intentions behind his moves, including the banning of the Trump Twitter account. I fully support what he said in his rationale for it. We don't need to get into that of it.
What? Pump the brakes.
We've had this conversation where I do agree that the censoring of Donald Trump is the wrong move ultimately, but I understand the position he was in, the logic and the conclusion that he was drawing, and based on those rationales, ultimately, yes, Twitter has become our town square. In that moment in time, he felt in his belief, with his control and the safety that he wanted to see, it was in the best interest to not allow someone to have that platform. Which
I see what you're saying. I mean, my view is like it is a privately owned company.
Exactly.
They have to do
100%.
whatever the fuck they want. I mean, yeah, sure.
If you don't play by their rule, dude.
Yeah,
but no shirt, no shoes, no service. It's the same fucking thing, in my opinion.
I feel like you have that argument like at least once a week where you try to go in somewhere without shoes or a shirt, and then you're just like, it's a free fucking country. I thought this was America. You pull like a Stan Marsh. Yeah, I mean, it's privately owned company. And when people are like, we need to nationalize this shit, it's a shared resource.
It's so much worse.
It's so much worse. Exactly. It boils my fucking blood. And what actually needs to happen is people should be focusing on decentralized systems that are resistant to centralized control, which of course Dorsey is a huge advocate of and is in the process of building out some of the tools that are going to support that world.
I don't want to cut this off, but we're fully sidetracked now, so I want to take us back on the course we were on.
Fuck you for keeping us on track.
So, because I actually do believe that Jack Dorsey wanted to see Elon sort of in that position and take over Twitter, and I also believe that there was some posturing happening within the board itself, because a board member is now going to be gaining a bigger stake in Twitter, and the rest of the board wanted more money, and he's like, fuck you, I don't want to pay fucking more money. I'll pay his price. That is why I think you saw some of that stuff happening. I think, quite frankly, what happened with Elon was he then very quickly realized, oh shit, I might actually be way overpaying for Twitter. Not just overpaying, paying a market premium, but I might be overpaying given where the market is going and the way tech stocks are going to be behaving as the Fed exits the market. So with that in mind, like the whole bot account thing has been truly comical. I mean, like if you follow Bitcoin Magazine's Twitter account, you end up seeing like, what? I hate admitting stuff like this, but there are probably like 20 different comments once Bitcoin Magazine like retweets from the Video Bitcoin handle, for example, where we just get like all those spam comment accounts. And there's so many like different BS hackers, fake accounts of all of us that have popped up at some point or another, like there are so many fake accounts that, and I love the question that Elon kind of posed, which was, in your personal experience on Twitter, like what percent of your interactions are with like fake spam or bot accounts? And like that's a very interesting thing too, because there are certain bot accounts that are genuinely just like auto generating tweets that like some of us follow. Like Nancy Pelosi stock tracker, I believe, is more of an algorithm, no, where once a trade happens, they send out a tweet, or is that just an individual actually running it?
No idea.
I know the one that's
It was
like,
two different ones. One was a bot, one was a person running it. But yeah.
but like there are those accounts. Like another example of an account that I for sure know is a bot is like the big tech follows account that will like send an alert when like some big person in tech, like Elon, Jack Dorsey, or whoever, Michael Saylor, starts following this account. That is an auto-generated tweet that is done by a bot. But like that is an account that people actually follow and like want that information. So like where it's interesting, this conversation happening around the bots. Truly, I hope everything just gets cleaned up on Twitter, but it won't. So my favorite thing, and I want to shout out honestly one of my favorite news writers out there, Trung Phon, formerly of The Hustle, now independent. He recently went through the Twitter court filing, and literally, like, you guys have seen this claim that like Twitter has said like Elon's sort of comments on Twitter were very like strange. And essentially like alluding to like how he was going to like have a hostile takeover of our company. And literally in their court filings, they have like tweets, like Elon's actual tweets on this court document of like him putting like these musical lyrics on like, I'm going to take you over, some shit like that. It was hilarious. But yeah, that's the very long version of like Elon Twitter saga and like where it's been and where it is now.
Yeah, I mean, at the end of the day, slay your heroes. Don't put anyone on a pedestal because they will disappoint you. And Bitcoin is not about individuals. It's about the network and the incentives therein.
Yeah, I'll just add, it's funny. I agree that it's funny that Twitter didn't want him to take over because they're like, oh, this is an attack on free speech. He's taking us over. This is not fair. We can't censor. We can censor. We can't, won't censor. The big thing for them is they're forcing him to buy at exactly the right time. Like this is a great play by them and the law firm, because as the economy is tanking, they locked in the bid of what he was supposed to buy them for. So unless fraud comes out and he can back out, there was a lot of caveats that are like, you understand. I'm sure he like signed, like, you understand what you're buying, even if there's bots. I'm sure there's language or legal lingo in there that like you're buying it as is, and like barring there's no company fraud, you're forced to buy this. Basically what they're doing is like, if he's buying at that fixed price of whatever it was, $54 billion, there's no backing out of that. He either needs to find equity while the market is tanking. So they're basically arbitraging, like locking the stock in at a certain price. Maybe there is a reevaluation period when the deal finalizes that it comes down a little bit. But yeah, that remains to be seen. But basically Twitter is like, we've locked in our bonuses and our payouts once this forced to go through. And obviously his legal team is going to do the same to try and find a way for him to get out of it if it's worse, or if his equity drops so much that it's difficult to buy. But yeah, we're entering unprecedented times, and we'll take it. Yeah, pretty much that's it.
Love it. Love it.
But before we wrap, I'm using notes. Chris, do you want to pull up this waterfall chart as well? Because I thought this was a really interesting chart of just like all the capitulation and all the Bitcoins that have been sold during this market downturn. And to just really show you, like, I mean, the Tesla sale is now the second largest Bitcoin chunk sold, like of just total Bitcoin, not a total. I'm not worried about the US dollar value. I'm talking the total number of Bitcoins sold. Tesla sale is the second most of any of these. And this includes 3AC. This includes
Luna, Celsius.
Celsius. Well, no, Luna is the only one that's bigger.
Oh, yes.
So Luna is the only one bigger. So we have just over 29,000 Bitcoins sold. And then right now, so it's 29,060, 6,000 would be 1, 2, 3, 4, 174 million Bitcoin dollars worth of Bitcoin is how much they could buy if they just went and bought the exact same dollar denominated amount that they sold. If they just went and rebought that amount, they would essentially now be able to walk away with just so much more Bitcoin. There's no wash sale rule, Elon. Take your tax advice from a guy talking to you from his mother's basement. There's no wash sale rule in Bitcoin. Take those losses that you just did. Now buy
This
more
is
Bitcoin.
not financial advice.
This is only financial advice for Elon
So wait.
This is
So
not financial advice for any of you other idiots out there.
My conclusion from that chart is there has been enormous selling pressure in the Bitcoin market right now, or over the past quarter. And the fact that we are still at, right now, almost $23,000 is fucking incredible. Like, I think that
over 1% of the total supply of Bitcoin's been sold since May of this year. 236,237 Bitcoin have been sold by like all the entities we listed: Tesla, Luna, Three Arrows Capital, Celsius, a bunch of other public miners and such. But there's been a lot of sell side pressure, and we've hung pretty strong, to be honest.
Extremely strong. Like, I have never been more bullish on Bitcoin. Like, that is amazing. 1% of the total supply that exists today, if I understood that correctly, has been sold. And, the US, the state of New York, all these places are like, oh, Bitcoin is bad, just like straight bullshit. The fact that we are still here is incredible. On that note, we're going to go to a quick commercial, and then we'll be back with Joe Consorti for another conversation. Let's do it.
What is up, guys? Welcome back. And we are excited to introduce our guest for today. We've had him on the show, friend of the show, friend of ours, writer over at the Bitcoin Layer, Joe Consorti. How are you doing, my friend? Nope. Yep.
Doing good. Can you hear me okay?
Yeah.
My connection's a little bit choppy. Everything good?
We can hear
He
you
is
great.
also, fun fact, coming to you from his mother's attic, not basement. He got the upstairs. I got the downstairs.
Amazing. We can hear you great. Can you hear us?
Yeah, no, that's exactly right. Coming from the attic. Yeah,
Awesome.
I can. You guys are coming in a little bit choppy. Yeah.
All right. Well, let's power through. Joe, can you tell us and the audience who you are, what you're about, and why they should care?
For sure. Yeah. So I am a recent graduate from the University of Vermont. I've been working with Nick Badia over at the Bitcoin Layer, and basically I am a research analyst. So I do all sorts of macro research, Bitcoin research, and I sort of try to fit Bitcoin into this sort of global macro lens. We definitely lead with a lot of the major macro indicators. We definitely have a huge focus on rates, specifically, the treasury market and other money market reference rates, because generally speaking, those lead everything else in the economy. If you want to know what's going on, take a look at the rates markets, and they will tell you. And so that's essentially what I've spent a lot of my time doing. I stare at the screen all day, take a look at charts, and try to extrapolate into the future what's going to happen. Try to obviously probabilistically talk about things, not make any massive predictions, and then sort of talk about all of that in the context for our readers. So that's what I spend my time doing.
Fantastic. Let's dive into it. Q, I'm sure you have questions, thoughts, concerns.
Well, let's first just talk Tesla, if you'll entertain us. What was I guess your initial reaction, and does this change your out? Start with this. A three-part question. Initial reaction on Tesla's sale of Bitcoin. Does this change what your outlook is on Tesla, and what is your outlook on Tesla?
For sure. So initial reaction to their sale, not a massive surprise, actually, not a huge surprise. We've seen basically every single, and I'm sure you guys have heard the expression, every single main character of this, bull market gets slain. And, that's why you really never, or bear market, I guess, you never want to become the main character. And I think a lot of people were idolizing Elon Musk and taking a look at the fact that they were putting Bitcoin in their treasury, and they were getting extremely excited about it. And that is something to get excited about. But I think a lot of people really overextended themselves, and they put way too much weight and their belief in Bitcoin into this. And so a lot of people are seeing a massive company like Tesla start to downsize their Bitcoin position, and they'll say, well, Bitcoin's dead. Well, then clearly you don't understand why companies hold assets in their treasury, and you don't understand the value proposition of Bitcoin. If your value proposition of Bitcoin was contingent on a massive company holding in their treasury, you might want to rethink that. And the reason they sold it, I'm sure you guys talked about this earlier, but the reason they sold it was because their cash flow position would have otherwise been negative. And so they sort of sold it as a way to do this window dressing to make themselves cash flow positive for the quarter. So ultimately, it's all bread and circuses, but the value proposition of Bitcoin doesn't change. If anything, 238,000 Bitcoin have been sold, by various entities over the last, since May. More than 1% of the Bitcoin, or more than 10%, more than 1% of the Bitcoin supply. Sorry. And so, nothing out of the ordinary with Tesla selling. There could be some more skeletons in the closet. We could see some more forced sellers, but ultimately it doesn't change the value proposition of Bitcoin much for me or anyone else.
I mean, so we started to see, this started, I would say, with the Luna craziness, and the contagion picked up, and we saw some, I want to say, funds that are more Bitcoin and crypto oriented starting to get hit. Then we're slowly starting to see some of these miners capitulate, and we'll get into that in a moment. And, now we're seeing a company like Tesla that just was investing in Bitcoin capitulate. Is there another class of Bitcoiners that doesn't touch these three buckets? And P, I present the question to you as well, that could become a forced seller next?
So I'll kick things off. You're right. We've seen exhaustion, or we've seen selling from these huge cohorts all the way down, right? Bitcoin and crypto related funds that were extremely over leveraged. And then, that contagion, that forced selling, it drops the value of the collateral of some of these mining companies who borrowed pretty heavily against their ASICs. And then for that, and also declining profitability, that they're forced to sell as well. We saw several mining operations sell a lot of their Bitcoin supply. One in particular sold 75% of the Bitcoin that they held, and they actually sold more than 100% of their Bitcoin flows. So more than what they were mining on a quarterly basis, they ended up selling it in order to cover their costs and keep the lights on. So that's been a dynamic that we've observed over the last couple of weeks here, a little bit over a month. Hash ribbons have been in the red. Hash ribbons are a signal of miner capitulation. It's essentially when the 30-day moving average of the hash rate drops below the 60-day moving average, and we've sort of been in that phase for the last month or so. And every single time that happens, once it's over, it marks a local bottom for Bitcoin. One of the charts I sent you guys, I DM'd Q, maybe you could DM that to P, was this hash ribbon chart. And essentially it marks local bottoms. So we know miners are in the process of, selling their reserves. Full capitulation might not necessarily be in yet, but once it is, that's when a local bottom is in. In terms of other cohorts, potentially, we don't know. There are obviously more, potentially more skeletons in the closet, but I don't think, I think the worst of it is behind us, frankly. I think the worst of the bad leverage on balance sheet and with Bitcoin derivatives have been purged. I think these companies that had really, really fickle financial positions have been completely, swept out of the market. And so, in terms of other cohorts, nothing major, nothing massive that can really move the price. I think the last main character standing is Michael Saylor and MicroStrategy, or maybe El Salvador announces they're selling off some of their positions. But apart from that, I'd like to hear what P has to say there.
Honestly, I think that's a great explanation. I don't have anything to add. That's all I got.
P is just stressing because he has a court date later today. That's why he was trying to tie his tie this morning. So
No, our producer is out, so I'm trying to manage all these slides. So yeah, tell me which one you want to go to, and we'll make it happen, man.
Well, let's
Yeah.
let's just dive into this hash ribbon stuff first. I loved your guys' explanation on one of the most recent issues of the Bitcoin layer. And I'll let you explain first what we're looking at and why these local bottoms have mattered historically.
For sure, yeah. So basically, these ribbons are formed. You can see the green line when I should have done a zoomed in chart, but you can see. Let's take the one in January 2019, for example. If you take a look at when the green line up above, which is the 30-day moving average, passes underneath the 60-day moving average, and this is hash rate, right? Basically, the Bitcoin network and Bitcoin as a commodity can sort of be thought of as like a proxy for energy. Right? The best way to think about it is, energy. Bitcoin for a while trades at a stark premium to its production costs, and at the Bitcoin layer, we've created a production cost metric. I know Blockware has, Charles Caprioleo has, everybody has their production cost metric, but Bitcoin trades, and sometimes it gets a little bit too overheated, and what you can sort of mark the events where major capitulation in price is occurring by monitoring hash rate, right? You could sort of take a look at hash rate and understand that that's like the basis for the creation of Bitcoin. That's how much computing power is going into creating Bitcoin. So when you have a massive log off, that means you've got a bunch of downward difficulty adjustments in the future. That means miners are selling their reserves, they're logging off the network. And so that's why when you see the 30-day moving average, which is an aggregate of the average hash rate over a more recent period than 60 days, it shows you that a very rapid, as in, we're using these sort of intervals, a very rapid miner log off is happening. And that's why it marks these capitulation events. You can see the separation between the 30-day and the 60-day in 2019, another major separation in the middle of 2020, or in March of 2020, excuse me. And then after the China ban, you can see another major divergence between those two. As of right now, there isn't a huge divergence between the 30-day and the 60-day, but still, it's marking that miners are logging off the network in a pretty big way, unplugging, selling their reserves, meaning the production cost of Bitcoin is going down. Bitcoin ends up trading a little bit lower to that, and so that's sort of what we're seeing with this hash ribbon metric here.
And so, we also saw historically that it has a hash ribbon has formed during a period where we can look back with hindsight and say, oh, we did have the market bottom during that window of time. But there isn't like a clear, or is there a clear pattern of like actually at this sort of moment you can get a sense of, or by after these number of days within a hash ribbon, that's when you can typically start to expect to see the bottom. Is there anything like that? Or is it just sort of more of a, hey, while we're in this is the potential for the bottom is in this sort of window of time that we're in right now?
For sure. My connection is a little choppy, but I caught most of that. In terms of like a standardized after X amount of days, you can expect capitulation to be over. there isn't really something for that. As you can see, like the size of these bands, which basically just represents the amount of time that there's this huge minor capitulation. They vary pretty significantly. So like in 2019 and 2021, you had similar size bands, but the band we're in currently is those 4 bands in between, sort of between 2020 and middle of 2021 after the China ban, and then currently, and we're sort of in that regime where it's only about a month and a half. So if we're going to have a prolonged period of this extreme chop towards the bottom, obviously we're facing extreme macro headwinds right now, but I'll talk about in a second why that could be changing. I don't anticipate capitulation to occur for much longer, but again, we never know, right? We're talking probabilistically. Just taking a look at this, I wouldn't anticipate. I would anticipate minor capitulation to be over within the next couple of weeks. Given the way that these things have happened historically, but again, you never know. There's really no standardized way of measuring when a hash ribbon is going to end. It's more so this is like what the leading indicator is, and then afterward we could take a look back and mark a local bottom.
So the only reason I wanted to just really specify and clear that point up is to be able to lean in and say none of this is financial advice. Do your own due diligence. Do not listen to 2 people who live with their fucking parents. Make all of your financial decisions based on what a guy in his mother's basement and a guy in his mother's attic are telling you. If we were people to take financial advice from, like if we were people to take financial advice from, we wouldn't be living with our mothers. Like, let's just be real.
Yeah. It's really that simple.
So let's I want to unpack what you're saying, because you kind of sound a little bit more bullish than I frankly have been for some time. What's making you feel bullish, or that capitulation could be coming to an end?
For sure. So P, if you want to pull up the chart, I labeled all the charts 1 through 9. The first one is the world interest rate probability. And the way that people can think of this is Fed funds expectations and when they're going to happen, and when the inflection point for Fed funds is going to occur. And if you'll take a look at the world interest rate probability chart here, you can see that the inflection point is around February of 2023. And the terminal rate, so the highest rate that federal funds is going to get to, is 3.5%, right? 350 basis points. So basically what the market is telling us, what the market is expecting that the policy rate to be, is 3.5%. Now, the 2 things we monitor here, and basically this is like our main guidepost to monetary policy. And if we want to understand where everything else is going, we want to observe monetary policy. We want to observe rates. So this is one of the leading indicators we observe. And what I'm observing, what Nick is observing, and what we write about over at the Bitcoin layer is this idea that the rates market is sort of accelerating the rate at which the Fed has to hike. So the Fed is saying, or initially they were saying they're going to hike all the way through 2023. But as of right now, interest rates probabilistically are going to stop hiking, or the Fed funds is going to stop hiking in February of 2023, right? And so we're sort of expecting another 75 bips at this July meeting. We're not saying that they're going to hike 100 basis points, but what we are saying is that the terminal rate that they're going to hike to is lower than it was initially, and it's pushed far more forward. When they started hiking in March, it was this idea of 25, maybe 50 at some point late in the summer, and then we're going to continue doing 50 and then ultimately slow down. What we care about is rate of change. So realistically, 100 basis points was on the table for like 2 days. And the Fed, one of their policy tools that they use to guide the markets is forward guidance, right? They leak things, they do official press conferences. And through the Wall Street Journal, they leaked, right, that they were going to do 75 basis points before they did in the June meeting. And after the hot inflation print in June, after we had hiked 75 basis points, there was talk on the table for all of like a day that they were going to do 100 basis points, and that was swiftly shot down, right? So you can think about it in terms of, okay, we start at 25 basis points hikes, then 50, then 75, and then 100 was on the table, but now it's back down to 75. So you can already think of, okay, the rate of change of the policy rate hikes is already topped out, right? It's going to slow into December. We're going to do 75, And then as you can see here, a 50, a 75, or a 50, a 25, right? Rate hikes are going to slow into February before they ease. And that's what the market is increasingly pricing in. That's sort of why we say, 50 bips in July, or not 50 bips in July, 75 bips in July. And I'll sort of talk about in a second here why that means relief for risk assets. In very, very broad terms, ultimately higher interest rates, right? They put pressure on risk. They put pressure on equities. They put pressure on Bitcoin. And as of right now, 10s are topping out, 2s are topping out. A bit of relief for risk is underway. We'll talk about that more in a second here.
I don't hate, I mean, I fully buy into this. We had this conversation with Dylan as well that, the market itself seems to expect interest rates to give us a sort of return to zero rates, just based on the fact that they're calling the Fed's bluff more than anything. How much of this, though, like this rally you're feeling right now, do you think is more a dead cat bounce with like a short-term bottom, or do you think the bottom is already in?
For sure. So we don't know. And I don't know. And I wouldn't be surprised if it was a dead cat bounce and then we continued channeling sideways and downward for a little while. And I wouldn't be surprised if, we saw sustained increases in everything across the board. Ultimately, like, now's not the time to be making predictions. Now is sort of the time to be taking a look at rates and, trying to extrapolate what could happen to equities, what could happen to risk more broadly. And what we are seeing, with, and we'll pull up the 10-year, that's chart number 2. The reason I'm basically saying that a bit of relief for risk could be underway or it could be sustained is that basically, these different tenors on the United States Treasury yield curve, they trade with different things. So what I mean by that is you can take a look at the 10-year here. This trades with inflation and growth expectations. And essentially, inflation and growth expectations, they topped out at 2.5% right around, or 3.5% right around June, right? And so what does that tell you? Well, that tells you even though spot CPI is coming in at 9.1%, inflation, the market is telling you they're expecting growth to slow down. They're expecting inflation to slow down, right? Inflation and growth sort of go together like pasta and marinara, right? We couldn't break this 3.5% upper bound, right? And so chances are, in my mind, we're going to continue to channel around this 3% zone for a while. And then potentially move downward, right? What does this tell you? It tells you that the rates are doing their job and slowing the economy. Rates are doing, sustained periods of increased rates are doing their job at slowing growth expectations. And the Fed won't have to be doing these very aggressive hikes for much longer. So that's why I say that relief for risk could soon be underway. The next 2 charts, they show you the 2-year, which corresponds to Fed funds expectations. And then both of these arrows here happen right around June. And, they've sort of channeled down and towards 3% since. And if you take a look at the S&P 500, I put an arrow where these other 2 arrows are. Essentially, after we topped out, you saw a bit of relief because these rates didn't cross those upper thresholds, right? Essentially, the Fed listens to the rates market when it makes decisions, right? You've got to take a look and think, like, who's in charge here? Companies are borrowing at a spread to treasuries. They're borrowing at a spread to the 3-month T-bill, right? They're not, unless you're a bank, you're not really paying attention to Fed funds. 3-month T-bill is sort of the prevailing rate that you're using to sell debt. And so that's why, these 2 graphs are essentially why we believe that potentially a shift from risk off to risk on is underway. That could be a dead cat bounce, that could be more sustained. We'll have to wait and see. But, I think as of right now, it's okay to potentially begin averaging into the market. I don't trade anything, and this isn't financial advice. I live in my mom's attic. But, watch rates. These sort of lead what equities, what risk is going to do.
I think it's also really telling that, as you mentioned, that peak happened in June, and that seems to at least be where, for the time being, the market saw a bottom, risk saw a bottom, and we're starting to see that slow and steady climb back up. You know, I will go out on a ledge and say, like, my expectations. It's interesting. Like, while my expectations are no different than the majority, I'm frankly getting really nervous around the idea that there are so many people who believe that we're going to be entering a recession, yet spending habits haven't changed. You haven't really seen the market act surprised, I think is the way I would like to put it. It's been going down, but it's just been going down nice and steady for some time. Equities have, like, the NASDAQ recently regained its 50-day moving average, which would give it sort of the runway to at least climb up, but it's been on such a downturn that there are so many other moving averages that now have resistance overhead. It's going to be really interesting. I think, if I think things through human psychology wise, I'm really nervous about some overhead supply issues. And what do I mean by that? I mean, people who are underwater on some of their trades when they were trying to buy the dip, trying to get out when they break even, and that will give you selling pressure. And back in the Bitcoin adjacent equity days, I would have pulled up a NASDAQ chart and literally shown you, like, where to expect some sort of resistance based on what we've seen on the downturn. And maybe I'll smoke some weed later today and actually put together one of those charts and throw it out. So, like, I'll caveat that I agree with you that the market is going to change direction, and it will change direction once the Fed makes that decision. So it's not going to be this, like, slow, steady climb. I think the slow, steady movement is just general market direction. In the same way that we saw when the market was ripping and we were in a bull market, there were those pullbacks that would come down and sort of test the 50-day moving average, sometimes break under it for a little bit. Sometimes you had a 2-month window where you traded sideways before then another bull leg up. I think that's kind of what we're seeing here. Instead of a dip, you're seeing a little bit of a dead cat bounce. Do I necessarily think we're going to go hit the bottom again? Maybe. I think, quite frankly, if we were to hit a bottom, it would mean something like 100 basis point rate hike was put on the table, which would be kind of crazy to think that we went from a 25 basis point rate hike to then the very next Fed meeting, they gave us a 50 basis point rate hike. And then in the very next meeting, they gave us a 75 basis point rate hike, to then now, if they give us a 100 basis point rate hike next week. Joe, there was a chart, it's not on this list, but actually the last time you and I talked, we talked about how the rate in which the Fed is increasing their Fed funds rate is faster than we've seen at any point in our history, in either of our lifetimes, absolutely, but in quite some time. The Fed has never raised rates this quickly. Where is your expectation at? What side of the camp do you sit on a 75 or 100 basis point rate hike? And I only give you those two options because I genuinely believe those are the only two options being discussed right now.
Absolutely, for sure. So if you want to pull up chart number 5, for some reason as well, whenever there's no chart on screen, Q, you sound like a robot. I'm catching every other word, but it's okay. I got the majority of it.
YouTube comments. Am I still coming through shitty for you guys? I don't really care if Joe can't hear me, but so long as you guys can hear me, that's okay.
I think it might be something. But either way, so taking a look at this next chart, I labeled it "Rates Lead the Dance," and your question of whether or not we see, or whether what sort of hike do we see from the Fed in terms of its policy rate? I think wherever tens move is where the Fed is going to follow. So if you take a look back towards 2019, there was a period before 2019 where the 10-year yield was actually channeling for a little bit of the year. If you'll notice, in the middle of 2018, it actually came down and then started channeling right around the same area that we are now, around 3%. And at that point, you'll notice that Fed funds actually flatlined for a little bit, right? So in their hiking cycle, it means that they went a couple of meetings or they went at least one meeting without hiking the rate, right? So what does that tell you? It tells you, okay, the Fed noticed that tens were stabilizing. They noticed that rates were stabilizing. And so they said, okay, we don't have to hike, right? We'll hold off on hiking a little bit more until we can get some more direction from tens. And then what do you notice? As soon as tens start moving up a little bit more, they start raising their rates again. And they ended up getting to a policy rate of 2.5%. And then the 10-year yield actually broke below it. Okay, so the 10-year yield broke below it. And then what did they do a few months afterward? They started cutting. It broke very substantially below it from a high of like 3.25% all the way down to 1.75%. And they ended up hammering rates down to 2%, right? They ended up putting rates, right back down to where the 10-year yield was telling it to go. And essentially, I think we're in a similar regime now, where the Fed is taking a look at the 10-year. The Fed is understanding. They don't even, they might not be taking a look at the 10-year, but they fully understand who in this scenario is really leading the dance, and it's rates, right? You behavior in 2019, the Fed's behind the rates markets, and so right now with the 10-year yield sort of channeling where it is right now, expectations are flatlined, right? Inflation expectations are flatlined. So CPI is lagging, but forward-looking CPI expectations, i.e. the 10-year yield, growth expectations, are flatlining too. And so the Fed putting a 100 basis point hike on the table, sure, inflation's bad, but ultimately you want to sort of portend the future. You want to take a look at what's happening, what's going to happen in the next couple of months. And the 10-year yield allows you to take a look at that. And so they don't need to be aggressive in their hikes. And I think the Fed understand, as much as they're big central bankers who are mostly lawyers and things like that, and Greg Foss talks, I highly doubt that they're going to be aggressive given the way that tens look right now. I think a 75 basis point hike is far more probable than something like 100 basis points on the table. But those are, again, not financial advice, but that's what I would expect.
Really quickly, I want to shout out Wesley. I hope I'm pronouncing your last name right. Tights. Fuck yeah for getting all your shit off Coinbase. Fuck Coinbase. Get not financial advice, but everyone should get all their keys off of exchange. Get your coins off of exchanges. Get a wallet. Do the work. Find a video. Send a little bit at a time. I just wanted to draw attention to that. That's fucking awesome. You did not just try to defend Jerome Powell to me. You did not just try to justify anything that man does to me.
Whatsoever. Washed up lawyer, not financial advice. But again, it's like, I tweeted out yesterday, like one cowboy is like riding in the saddle and he's got like a gun. And then the other cowboy, right, is riding on like a mall pony that's rocking back and forth that you have to put coins into, and he's got a gun holster, right? Who's really leading markets here? It's rates. It's not the Fed. So rates are already stabilizing right now. They're moving around this 3 area. They couldn't break 3.5. And so, inflation expectations are coming down, and the Fed's going to have to listen, right? It wouldn't make sense if inflation was, inflation expectations were coming down stupendously, and then the Fed acted on, whatever they learned in law school, I don't know, and they hiked 100 basis points. It wouldn't make much sense. And so, sort of extrapolating, that's sort of why I'm saying you want to watch this relationship. You want to watch tens. You want to watch twos. Twos sort of trade in line with policy rate expectations. Tens trade in line with growth and inflation expectations. But realistically, the Fed is just a kid. They're just a kid on a fake pony with a fake gun in a fake side holster. Realistically, they're following basically everything the rates market does.
You got to walk me through that analogy again. Wait, there's a cowboy. One's got a gun in the holster. One's got it out of the holster. There's a high noon, a showdown. How does that work? Nothing.
Best analogy I could come up with.
All right, fair enough. Fair enough.
Oh my gosh, Joe, what are you saying, bro?
I'm here
You
for it.
cannot be apologizing for Jerome Powell. He's a fucking puppet. All he learned in law school was to just make his boss happy. And who is his boss now? The fucking federal government. So, no, I'm sorry. No, I
He's a
love
product.
and respect
Wait,
you.
hold on. He's a product of his incentives, man. It's all about the incentives.
That's what I'm saying. Like, he essentially is just a government stooge, and he's employed by government officials. So what is he going to do? He's going to do whatever they tell him to fucking do. That's why he keeps his job.
I think that's an oversimplification. I mean, it is true, but
Or comes
Again.
Razor.
fuck Jerome Powell. But at the same time, you know,
So I want to play a little speculating game because, you know, we are people who have spent more time reading about financial markets than the average person. And I think us sharing an opinion or perspective is fair. And for us to speculate is fair game. So you're going to do it. Inflation. We got 9.1 read. Let's talk this out a little bit. Expectations for July. And I'm going to throw some statistics out there for you. So the price of oil is down roughly 15%. The price of food is not. Price of rent is not. I would probably say the price of everything else has not changed on the low. It's probably more expensive for everything else with the exception of oil. However, oil was the largest driver for our most recent inflation print and has been the biggest driver for inflation during this entire run, essentially. Where are your expectations? Do you actually think that this pull down in the price of oil could actually give us a lower print next month for July?
For sure. So I think it might have a material effect. Ultimately, you know, the weightings of the basket are changed constantly. You mentioned the specific parts of the basket. You mentioned you know, food at home inflation and all these other things, and that's what you should be looking at. But that never ever gets reported, like ever. So I think the price of oil coming down might have a material effect on inflation. It might not. It could be misleading, but I wouldn't, you know, I wouldn't rule it out. I think that one of the best bellwethers for the economy that you can look at are commodities, right? Commodities, particularly copper, because it's an input in so many things. That's what you can watch in order to see like the health of the economy, and not just that, but the forward-looking health of the economy too. You know, copper channeled down months before we got absurd inflation prints that have continued accelerating. So yeah, no, I'd say watch commodities, watch natural gas. I think even if it doesn't bring down the CPI basket as much as we'd like, if we did see some relief in gas prices, that would potentially help out the consumer much more. I don't know if it would necessarily play into like a dramatically lower CPI print than anticipated. And the reason I say that, and I'm sort of trying to hedge my language and be probabilistic here, is because we saw inflation decelerate and then accelerate. We saw you know, 20 basis point increase and then 30 basis point increase. Like, holy hell, what's happening, right?
Yo,
So,
sorry to
I
cut
wouldn't
you
rule out
off.
inflation.
Sorry to cut you off really quickly.
Yeah.
Pete, take Joe off the screen. Joe, you are literally a pixelated mess to everyone else. It's like actually kind of creepy. I'm taking a screenshot of this just to send it to you later.
all right. I'm gonna. We're gonna go back to the 3F. Keep
Dude,
going, Joe.
this is really scary. I just sent you a picture of what you look like, Joe. That's gnarly. I apologize to any children that we scared. Joe, sorry for interrupting you. Please continue.
You're on a roll, man. You look great to us. Keep going.
You're chilling, no problem. If my picture and my audio ever gets cut off, I'm having some internet issues today. It's really odd because it's odd because I have an Ethernet cable and I'm the only one in the house right now. You know, mom and dad are at their real jobs currently, and so Joe is the one in the attic with the Ethernet cable on Bitcoin Magazine Live. This is a real job, but yeah, no, you know, CPI could accelerate. It could decelerate. We have no idea, but a relief in gas prices, a relief in you know, natural gas, relief in crude, all of those inputs, you know, any sort of sustained downtrend in that will you know, alleviate the American consumer. It could potentially move CPI down a little bit. Again, these things are volatile, especially right now. You know, with the amount of you know, this major credit crunch we're going through, the liquidity tide is washing out. So again, being probabilistic, but it could potentially offer some relief in next month's CPI print. But that's also not to rule out that it will once again accelerate after that. TLDR, who knows? Who knows?
Who knows? The puppet boy, Jerome Powell. P, what are your thoughts? What are your expectations for a potential higher, lower, stay the course inflation read for the month of July with 10 days still left in the month too? And he's muted.
One day.
Wait, dude, you just muted yourself.
Good fucking God. To those listening, apologies. As I said, our producer is out on a very, very well-deserved vacation. So I'm hitting all buttons, managing all the boards, and applying voice effects as needed to convey my my thoughts. Maybe I'll put some of those in there later as necessary. We talked about this before. I think that CPI, it is a manipulated metric. Most metrics are manipulated, but it is designed in the same way that the Fed forward-looking guidance is, right? They test the waters, they see what's happening, then they adjust, they change. The CPI is much more static. Once it comes out, it doesn't change, but it is it's a manipulated statistic that is designed to be interpreted specifically by the market in a particular way. So the way that I would start to try to answer that question is, what does the government want people to do? What is the actions that they want people to take? And then what specific print are they going to try to ship in order to get people to take those actions? So I would put it back on you and Joe. What do we think? How would a higher print, the same print, or a lower print on the CPI affect people's behaviors and the market's behaviors? And what is the government trying to get people to do? And I think that will tell us more likely. Also, of course, the actual reality is an extremely large factor in what they're going to print the CPI as. So it's not like they can just print whatever the fuck they want, but it's a manipulated statistic by design.
So I'll chime in first here. And so where the government, what happens if we get a higher read? I think it will be really actually a shock to the market if they came out with a double-digit CPI read. I don't think the market has the stomach for something like that, especially on a year-over-year basis, when year-over-year you actually are losing money in the NASDAQ or the S&P 500. Couple that with the fact that even if you held cash, your buying power is now diminishing. Like, the market would get rocked. I think that would trigger a new bottom in a lot of things, and most likely Bitcoin included. I think, quite honestly, you're going to see a manipulation of gas. I think the most recent downturn in gas and oil prices has been because we've started using things from the oil from the reserves that we hold. And that's only a short-term solution. So you're going to, for a second, see a cheaper gas price. Like, look, I filled up. Oh, shit. I was supposed to fill up gas today. I'm an asshole. I forgot to fill up the gas. And I get my data. Not full tank of gas. But like gas, when I filled up over the weekend, it was like 520s, 530s. And I was, before 4th of July, it was like 589. So, and these are Costco cheapest gas in LA type deal, not like everyone else who's paying $6. Like, no, I go out of my way to go to Costco for the cheaper gas, and don't at me. I don't give a fuck. I think it is going to be driven by gas. They're going to turn around next month. I think you're going to see like a similar thing we saw a couple months ago of a stagnation. We might get like an 8.9 reading or a 9 or even like a 9.1, and they'll say like that's a good thing. Like, this is peak inflation now. Like, we're going to start to see this downturn. Like, see, look, gas is down. And then they're not going to point out like all the other things that are actually still creeping up, because everything else is now feeling the effects of, hey, my dairy suppliers, they need to raise their price because their cost of shipping has gone up because they were paying a higher cost for gas and their margins were slipping the last month. So they've been raising their prices this month to make up for that. So I actually think, unfortunately, the worst has not yet come. And I think we'll get this false sense of hope. And what worries me is people are going to be manipulated into believing, oh, gas prices are going down. Yeah, everything else is going up, but gas prices are going down, so everything will return down to normal. But the only reason gas prices are going down in this short term is because we're using gas from and oil from the reserves. And once we run out of that, what happens? It shoots right back up. I'm going to steal exactly what Lawrence Lepard said on Preston's podcast last week, who both of those will each be on the show next week. Lawrence on Wednesday, Preston on Thursday. But Lawrence pointed out, he's like, the moment you run out of these reserves, we're getting $200 a barrel, and it's going to be like scary for people. And I don't think he's far off base there. I think we're getting manipulated. To answer the original question, it's going to be gas. They're trying to control how much gas that we're trying to buy. They're trying to temper those costs. I think it's really telling, though, that people's spending habits haven't really changed despite this increase in inflation, despite the increased recession risk, which I now realize I didn't talk about the powers that be on recession, but I might rip on that with Jimmy. But that's my very long answer of oil. I think it's going to go higher. I think a double-digit inflation reading could break the markets and force us to see new bottoms. But I actually think this next month, because gas and oil has gone down because of the release of these strategic reserves, you're going to get another sense of false hope.
But what about, Papa Biden telling the oil producers to lower their prices at the pump?
Doesn't matter. He has COVID. He's about to die. You can't get COVID after 75. It's like a thing, I guess. Some scientist said it, so it must be true.
Jesus, just to reiterate, I think it is insane that Biden got on his bully pulpit and told oil producers to lower the price of gas. Like, what the actual fuck?
Well, no. That's not what. That's actually. I hate what he did, but the real specific thing was it wasn't oil producers. It was gas station owners. And that's the larger issue, because gas station owners are like fucking mom and pop businesses. These are privately held. Most gas stations are just franchised out. Like, they're individually owned. They're not corporate owned. So for you to say to these small business owners, hey, decrease the prices on the item that you have the smallest margin on, that you actually don't make the most money on, your main bread and butter, your source of revenue and income is actually the marketplace that you have and selling all the like snacks and drinks. Like, that's how most gas station owners really make their money. They're not making money on selling you gas.
Wait, sorry. What does that have to do with Biden's?
Because Biden specifically, he called for gas station operators. He literally asked like individual gas stations, like people who he asked those business owners.
No.
And yes, dude. Oh my God. You didn't see these tweets? There was like these series of tweets asking gas station owners to lower the price of gas. And it's like, dude, you don't understand how this economy works. Like, these are not owned by Shell gas station is not owned by Shell.
Joe, back me up here. Did Biden tell individual gas station owners to lower their prices, or did he tell like Shell and, ExxonMobil and stuff to lower their gas prices? Can you hear us? You're trapped in the Matrix. We can't hear you at all. Amazing. We can't hear you. Try again, good sir. Weird. Q, can you hear Joe?
I can't. But so here's his tweet. My message to the companies running gas stations and setting prices at the pump is simple. This is a time of war and global peril. Bring down the prices you are charging at the pump to reflect the cost you're paying for the product, and do it now. These Shell does not set the price at the pump. The individual gas station owners set the price at the pump, but they're beholden to what they're paying for a price of oil. And that is not where they are making money from. Here's the link to the tweet.
Got it. All right, so
Yeah, can you
where do we
guys
go
hear
from
me?
here?
Okay?
Joe's having technical difficulties. I think I'm going to try bringing you back up one more time. Joe, can you hear us? Can you speak? No.
Yeah, I can hear you guys. Can you hear me?
Fantastic! You're back. Amazing. It sounds like you heard what we were saying. You're talking about just the ridiculousness of Biden telling everyone to lower their prices. Q apparently has a Twitter link that he put in the chat, which I'm not going to look at because I know I'm right and Q is always wrong. But I'd be curious to hear your thoughts as well.
Yeah. So the one thing I'll say, because I don't know if I'll get cut off again, is take a look at forwarded inflation expectations. Take a look at forward growth expectations. I want to correct something I said earlier. And sort of, I don't think we're going to see many more CPI prints that accelerate. I think we're going to see a sustained period of disinflation if this trend of the 10-year chopping sideways and moving down continues. I might be wicked choppy right now, video, audio. Apologies for that, but I'll sort of go out on a limb here. Again, not financial advice, but I'll put out an active call, and we've sort of been discussing this and mulling it over and writing about it as well, of 2.5% for the 10-year before the end of the year, which would be pretty good relief for risk assets, a shift in tone, and it would mean that the Fed doesn't have to hike as aggressively in their hiking cycle. Will likely end before the end of the year, if not early next year. Those are my thoughts. That's what the rates markets are telling us right now. And so, the 10-year, again, it trades with inflation expectations. So expect slowing growth, slowing inflation, which tells the Fed, hey, we don't have to be as aggressive in doing our job. Not giving any credit to Jerome Powell whatsoever, but ideally they'll listen and they won't aggressively hike ad infinitum. Should we continue to see this sustained trend of tens sort of topping out and then channeling downwards to 2.5%. And again, the Fed's not going to hike above, 10-year, right? These treasury rates. As soon as the Fed funds rate passes above either twos or tens, any of those sort of longer duration, longer maturity tenors, then the Fed knows that its job is done. So I would say disinflation, slowing growth, slowing inflation expectations, moving into the end of the year. The Fed will be done with its job. It'll not necessarily a pivot, but some relief for risk assets because rates aren't being hiked as aggressively. That's what I'll say.
Interesting. What do you think first of all, Q, I'm surprised that you have not brought up wheat so far in this conversation. I'm disappointed a little bit as well. Where are we on the status of your wheat collection?
To be honest, I'm keeping an eye on that deal that's coming out of Russia and Ukraine to get more wheat and grain out of the Ukrainian ports so that the rest of the world can eat. So literally that deal should be like a bridge gap for some time at least. Whether the deal goes through or not remains to be seen. That's why I'm kind of keeping an eye on it. Putin, last I heard, it's literally now being placed on Putin's desk and he's the one who can either kill it or approve it. And it's we really think that Vladimir Putin's going to do the right thing here now. So remains to be seen. That's where we are on the wheat of it all. But it's going to be a very interesting, I think, few months. To Joe's point, I do think there is validity in this belief that, hey, you might actually be fine. Oh no shit. You might actually be fine to Joe's right. There can be this point of deflation so long as the Fed keeps raising rates. That will trigger deflation. But here's the God's honest truth. And Joe, I'm not trying to use your own words against you here.
He's totally trying to use your own words against you.
I believe a lot of what you've said. I believe that we're going to reach a point of the Fed is going to keep raising rates to probably 3.5%. I think once they reach 3.5%, they're going to have their hands forced to reverse course, and they will. And in doing so, the lead up until that, we'll see a deflationary in the sense that this was peak inflation. I don't think we're going to get real deflation of negative CPI reads. I think we're just going to get lower CPI reads than what we're getting now. But then once they start reversing course, then we're going to really start ripping on inflation. And each time they have to be like, oh shit, fuck. We reversed course and now we're getting 9.3 inflation prints. Shit, let's start tightening again. Okay, fine. Start tightening. Oh shit, we're going back into a fucking recession. All right, time to pump. Oh shit. It's now I genuinely think that could be a cascading effect. That is when we think these through probabilistically, that is where the strongest probability of what I think will transpire is something to that tune. Like this repeated attempt at soft landing is going to be like, let me like dip my toe in the water multiple times.
That's
and
how
they're
it
just
always
gonna
is, though, right?
but they're just gonna fuck it up. It's not, because in the past it's been on a little bit longer windows of time. You get a tightening window of a couple years, a few years. You get a time of flooding the market with liquidity for 3, 4, 5 years. These windows are going to become smaller and smaller to the point where I think there will come a point in this decade where you will see them tighten, release liquidity into the market, and tighten again in a 12-month window. And that will be a crazy whipsaw for the market to really go through.
Joe, what do you think? Joe, come back to us.
Did you catch like 1% of that?
What's that?
Wait.
No.
Oh,
No worries. No worries. I was just asking for your opinion on Q's argument. Can you hear us now? He was saying,
yes.
okay. Q was basically saying that.
Yeah, I caught a little bit of it. Again, it's oh, sorry I keep talking over you guys. So there are two things for the viewers on my end who think that I'm like absolutely insane right now. There are two things on my end. So one, there's like a 10-second lag between everything that's being said. And two, I have no visual, so I can't see anything. I can't see Q or P. Like I'm every third slowed down. But I hear what Q is saying, like, you know, they ease and then inflation hurts and then they have to tighten again and it whips the market and he doesn't, and you know, that's completely valid. And I think there is like there's a scenario where that could play out. We have these tremendous exogenous supply shocks, and I won't pretend to be an expert in global macro, you know, even though that kind of is my job. You know, there are several types of
All right.
supply push and demand.
Wait,
pull,
Joe.
or it could
We
be the other way
actually-
around, supply.
You're cutting in and out. We're going to try one more thing and then we'll have to call it. Can you turn your camera off and we'll just have a glorious black screen and then we'll hopefully be able to hear your voice in a little bit higher quality. All right. Hopefully that has improved things. Joe, can you hear us?
Perfect. Can you hear me better now?
Yes, you sound a little bit better. So let's keep going. Can you pick up from where you were maybe like 30 seconds back?
Yes, absolutely. So Q has a point there in terms of, you know, thinking you've solved inflation because you know, prints start coming down and then you pivot back to easing, but then those same problems emerge again and you know, there is a.
Nope, we lost you.
I don't think like the lost me again.
Yeah, I'm sorry, man. I think we're gonna have to call it. If you can move to better internet, awesome. If not, it's been amazing having you on, dude. I'm sad that we can't finish this conversation. Is there anywhere you can get slightly better internet before we call it a failed experiment?
Oh nah, but I've got an Ethernet cable, dude. There's no better internet, unfortunately. This is it. But I apologize that the internet couldn't be better. Next time, hopefully relatively soon here, so that way I can maybe I'll go to like a Kmart or something. They'll have better internet.
Actually,
but
you know
either
what?
way, thanks for having me on. I think I was able to get.
All right. Well, thank you so much, man. Appreciate your input, and we'll have you back soon.
Love you, Joe.
Bye. All right, Q. What do we got? What are your thoughts on everything that Joe said, separate from the ones that you've already voiced here today?
I mean, like,
How
he's very
fucked
spot on.
are we? Is what I'm trying to get at.
We're so fucked. I got into this debate last night with my girlfriend of like when we should try to leave LA and move. And I'm like, would I be terrible to tell you? Like, I'm genuinely trying to time this, like when I think the markets are going to collapse so that like the cost of everything is going to be super cheap. And like the potential rent that we would get wherever we would move would be super cheap. Like genuinely trying to thread a needle like that right now. So, I kind of think what's really funny, and this actually perfectly gives me the opportunity to bring this up. So I learned this yesterday, that we changed, I guess, the way we decide when we're in a recession.
You serious?
And it's no, yeah. Oh, but this is apparently been a thing for some time now. I guess was living under a rock and like, did the normal thing that most people do, which is like based on the technical clues that we decided and agreed upon like decades ago, that would be how we read if there's a recession. My personal favorite indicator is the strip club indicator. When people are spending less and less money at strip clubs, like a recession is looming.
Somehow I don't think Jerome Powell is going to accept that as a metric.
But like, so the metric that I genuinely mean is like the 2 quarters of negative GDP. Like that is the technical definition of a recession. That is actually not how the US economy decides if they're in a recession or not.
What is the new one and when did they change it?
So I'm pulling it up right now, but it was changed. Okay. So in 1978, Martin Feldstein, at the head of the Cambridge, Massachusetts-based nonprofit National Bureau of Economic Research, established the organization's 8-member business cycle dating committee. The U.S. deferred judgment of what is and isn't a recession to this nonpartisan group currently led by Stanford economist Robert Hall. They don't hold scheduled meetings, meet in secret when they do meet, and sometimes only communicate by email. They also believe the 2-quarter GDP standard is, well, bunk. So what makes a recession? They essentially say they look for significant decline in economic activity that's spread across the economy.
It's all subjective.
It's subjective. They don't use any tools to actually measure it. And like,
But
this is how laughable it is. And the last recession that they came out and said was in 2020 during that window where we were in lockdowns, but they didn't come out and say it like while we were in it. They came and said it like 6 months after the fact. They were like, oh yeah, we had a recession 6 months ago.
But wait, I mean, that does not surprise me in the slightest. That's ridiculous. But yeah, they're basically waiting until they feel like they can say it and it's not a problem. But here's the thing I didn't understand. Did you say that this committee was formed in 1978?
Yes.
So wait. So it didn't change anytime recently. It's just always been like a subjective metric.
No, and this is where it's interesting. It's like, this is not like very commonly understood by most media outlets, which is why most media outlets still report on the 2 GDP decline or 2 negative GDP reading as the sense or as the sentiment of whether or not we're in a recession. Most, and like the source that I'm reading is essentially like kind of alluding to the fact that the main reason the media outlets like to do this is because they'd rather strike up the fear of recession, draw on viewers. Once you have the fear, now they're tuning in on a regular basis. And I think the original outlay of this plan was to essentially take the control or the narrative out of the media's hands to try to get like, oh, these are economists who spend their whole time thinking about these things. But the truth is like, this is their fucking like part-time side gig that they do for fun when and if they have time. Like, I don't need in a year for them to turn around and say like, oh, by the way, the summer of 2022, you were in a recession then. It's like, yeah, no shit. I'm living in it right now. I need information like that right now. So that's kind of where I'm like, I was like a little perplexed by that, and then uncovering a little bit more. It's like, oh, they're like, the media companies will, if we get a negative GDP reading next week, which is when the GDP numbers for Q2 come out, that is when we are going to hear these media companies talk about like, we're in a technical recession. But they will not be able to say anything other than technical recession because the official count is being given by the Business Cycle Dating Committee in the National Bureau of Economic Research.
It's so funny. Every time you say that, I think it's like dating as in like, 2 people who are interested in
I think they're
meeting
more
in the middle,
qualified.
touching genitals, and then eventually having children if that's what they want to do. And so I'm imagining like Jerome Powell, Christine Lagarde, Janet Yellen, just doing weird stuff about the economy. Have you read the book, The Mandibles?
I haven't yet. It's on the list though.
It's so good. For everyone in the audience, it's an incredible piece of fiction. It's sort of it's like a possible future, and it takes place in a hyper-inflating economic environment in the US. And I've never read like an economic thriller before, but it's incredible. It goes through all the ins and outs, and it is I don't think it's the world we're going to end up in because you have Bitcoin. It does not incorporate Bitcoin at all, but it's a fascinating read. And I actually learned a lot from it. Next week, when we have Preston Pish on, I want to ask him, like, where did that go wrong and where did it go right? And how do we know that we are not in that world, separate from the fact that, you know, we have Bitcoin? But we won't go down that tangent since you have not read that book.
Have you seen the movie V for Vendetta?
Everyone has seen that movie.
So I have not.
Oh, Jesus Christ.
But I was on Twitter earlier and like saw what the premise is, and I was like, no, it's not. No, it's not. And then I went and just like read the plot real quick, and I was like, oh my God, it is. And then wait for this. You know who wrote V for Vendetta?
Who
Like
wrote
the movie
V for
version.
Vendetta? Who wrote it?
The Wachowski twins.
Oh, I did know that, actually. I did.
They fucking wrote The Matrix and V for Vendetta. These people know something we do not.
All right. Interesting.
Like, holy fucking shit. That's kind of creepy. Like, I don't like there's this thing that I tweeted out like that kind of made V for Vendetta seem like it's a movie about like there's like a disease that's going out and the government's trying to control it. Like that doesn't seem like it's really the case. It seems more it's just like an authoritarian leader. I would attribute it more. It sounds like Justin Trudeau and like all the Canada shit sounds like the bad guy in V for Vendetta, which like honestly I'm looking forward to smoking some weed later and watching. But you know, this fucking freaks me out, but only validates my claims that we live in a simulation and it is fucking glitching.
I don't know how we would ever know that. I mean, I think it's a fun thing to pontificate about, but how would we know?
I don't know, but I want to be drinking whatever the Wachowski twins are drinking right now.
So since Joe was not able to stick around until 2 p.m., by the way, for everyone listening, we have Jimmy Song joining us at 2 p.m. Central. So that will be fantastic. But I want to take us through some of the additional news stories from today and get your thoughts, Q. So Bitcoin Archive tweeted earlier today that Justin Sun just claimed that the Tron DAO reserve will buy 32,000 Bitcoin, the same number that Tesla is estimated to have sold. That seems like absolute horseshit to me. I doubt they're actually going to do that. There's also an article on CNN Business that is titled, Tesla dumped a big chunk of its Bitcoin holdings, should you? And there's just so much talking head bullshit in mainstream media these days. It's wild. I'm scanning through to see if they actually recommend that people sell their Bitcoin. No, they do not. It's just an opinion piece where they just basically put a bunch of quotes in and summarize what the fuck's going on. Fascinating. What else? What have we not covered today? What have you been thinking about as it relates to Bitcoin? Not just general. Don't want to talk about the Wachowski twins, even though some of their movies are amazing. Some of them are shit.
Some of them are shit. I'll give you that.
What do you think that people are not thinking about or talking about in terms of the macroeconomic environment or Bitcoin and what's going on in the Bitcoin space? Let's talk about something we haven't talked about so far today yet.
Oh, let's talk, mortgage rates. Everyone keeps talking about this like impending collapse in the housing market. You've seen everything else kind of break. You've seen equities fall. You've seen Bitcoin fall. You've seen the broader crypto market fall. Private markets, VCs have started downgrading a lot. If you're raising money, it's down rounds right now. So it's across the board. You're seeing markets really fall off with the exception of housing. And a lot of people are calling for a housing market sort of decline. I'm really worried that it's actually just never going to decline based on the systems at hand. And the truth is, like, prior to 2008, prior to the 2000s, really, when like all these subprime mortgage bonds like really started to flood the market, there was a separation of the housing market and the equities market, and they were not inversely correlated, but it was almost like this understood thing that, hey, like in times where you see a bull market, the stock market, that's where you park your money. In times where the market is in a bear market, you go park your money in real estate. That was like a traditional investing thesis that had worked for generations. Could we be returning to that? No. And the reason I say no is because there's too much of the housing market tied up in the equity markets, even still. Look, these private equity companies that are buying up homes, they're buying up homes in lower middle class communities. They are trying to just be landlords and land barons. It's going to be very interesting to see how things play out. I have a tinfoil hat theory that my dad like poo-pooed, so I'm going to just share it with you. Even though like even Papa Q did not approve this theory. What happens when the U.S. can't pay its debt? What do you think could happen?
Well, funny you should say that. That is the premise of, or one of the premises of the
Mandibles.
Mandibles. Wow. Mandibles, the U.S. basically, this isn't spoiling really anything, but there is a group of nations outside of the U.S. that create a new currency called the Bancor, and they basically become the world's new reserve currency, and then the U.S. declares all of its debts null and void, and it sets off this whole cascade of disaster. Honestly, I don't even know how to answer that question, Q. What are you getting at? What do you think happens?
So honestly, like, that is the far more likely scenario, that they just reintroduce a new dollar and be like, this dollar, the old dollar is debunked. This dollar, trade in all your dollars. Debts you can't trade in. Sorry, we suck. That is far more likely than the scenario that I'm going to outline. But I genuinely think, some federal land is just going to be auctioned off to some of our debtors or our creditors. And I think all of a sudden the fucking like national park in Washington, D.C. is going to be owned somehow by China or Saudi Arabia or whoever else owns our fucking debt. So somehow, I don't know, the bond traders in New York will be fighting over Yellowstone, and honestly, I will be so sad if Yellowstone ends up going. P, I think you are a little in and out glitching.
My gosh, I just saw it. I'm watching the YouTube. My whole face was like, and technical difficulties, my friends. I don't really know what's going on. I don't know why all of you are in the Matrix and I'm not, but it could have something to do with the virus I sent you guys. Thanks. I appreciate it.
I can't. That would, to be honest, I'm not technically savvy enough to do something like that. Like,
there are still 90 of our most die-hard fans are still watching this stream, and we love
82.
all of you. 82.
Actually, shout out Rumble. We're hitting 117 strong. So 200 people out there still want to hear what we have to say about the world. So
fuck yeah.
My tinfoil hat theory is to pay off some of our debt to our creditors. I don't know. We'll start auctioning off like federal land. I genuinely believe that is a possibility. And then what happens when we run out of federal land? Eminent fucking domain.
Dude, I feel like there is so much crazy shit that has to happen before. I mean, honestly,
does it though? What's to stop?
I think federal land is going to get sold off before any of that shit happens. I mean, but it wouldn't happen.
I agree with that. That's what I'm saying. I'm saying once we run out of federal land to auction off, and we still have debt, how is it any different than, and like, I'm paraphrasing Alex's story, and I don't mean to steal his story. This is something that McShane's family has been dealing with. But their family got hit with eminent domain because BlackRock wanted to develop on what land that they had owned. What's to stop the only difference in the scenario that I'm trying to explain is, like, instead of a U.S. company, this is a foreign company that the U.S. is going to give the land to because this foreign company just has so much debt. So what I think is far more likely, like now tinfoil hat off, other tinfoil hat on, far more likely the US just creates dollar 2.0. Actually, now that I say it like that, dollar 2.0, Dixie 2.0 gets released before ETH 2.0. Mark it down. July 21st, 2022, I made that claim.
That's so funny. I love that idea that, yeah, you're absolutely right. We are going to see like a new US dollar before ETH 2.0 ever fucking launches because it's never going to fucking happen. It is an absolute disaster. Anyone who's like, yo, ETH is the platform of the future, they are deluding themselves because they are financially motivated to do so. It's an absolute shit show. As Vitalik himself said, it's like they're trying to change a prop airplane into a jet airplane while in the air in mid-flight. It's just never going to happen. And there's so much bullshit around it. Oh God, you said something that I wanted to dive into. It's gone. Keep going, Q. Keep it going. I can't hear you. Are you muted?
I was muted. I'm trying to jog your memory. So we were talking about housing, the government selling off federal land, eminent domain, government selling off privately owned homes, property, land to foreign businesses. Dixie 2.0 before ETH 2.0. Does that jog any memories for you?
Nope. I'm actually distracted because I'm reading through earlier today. Brian Armstrong of Coinbase tweeted out that he says at Coinbase, we actively monitor for illegal activity and investigate any alleged misconduct. In April, we received information about a possible front-running of assets shortly before being listed on Coinbase. We immediately launched an investigation into this. As a result of our investigation, we identified 3 suspects and provided this information to law enforcement. One person was a Coinbase employee who we terminated. Today, the Department of Justice has criminally charged this former employee and the 2 other individuals for this abusive conduct. Now, here is my question. What actually happened here? Because the only reason, like, for them to publicly announce this means that they either have to or it is useful for them to do so because it distracts from something else. I suspect it's the former, but maybe it's the latter. That is to say, Q,
There's also a caveat that in the filing by the SEC, they listed a bunch of shit coins as securities. So I think that was also a very interesting thing that came to light during this filing. It was AMP, RLY, DDX, XYO, RGT, LCX, POWR, DFX, KROM, all listed as securities by this filing.
No shit.
So that's also really like fucking hilarious that Coinbase people got dinged for insider trading. Fucking hilarious to me. Honestly, I think about this a lot.
The reason it's so hilarious is because it happens all the fucking time. And so like, again, it's like, it's all narrative games, right? Someone got caught or there was some reason why this person was on the shit list. And that's why this is coming out. But everybody, it's the sad thing is that anyone tries to portray these environments, these online casinos, as anything other than a manipulated market. You know, OpenSea is another one that people were obsessed with during the NFT craze. And yeah, it's all just manipulated bullshit. Hold your own keys, not your coin. Do not believe the lies that people are feeding you about, and trying to affinity scam around Bitcoin.
Yeah, honestly,
and
pickled for you. That was fucking hilarious. Like, I just sent a bunch of letters. Like, I honestly, you want to know what's fucked up? Maybe this is not a good thing to admit, but I have no idea what any of those tokens are, nor do I have an interest in like ever finding out what any of the tokens that I said or listed off, like what their actual name is, if you want, whatever. Like, scammers keep scamming.
Yeah, let's riff on this for a minute. I think
Oh wait!
You know,
Also, that
inevitably,
we're gonna dunk on Nancy because I've been spicy on my Instagram against Nancy Pelosi recently to a point where my girlfriend had to be like, "You're getting a little too aggressive against her."
oh God. Look, the problem with all these other shit coins is that they are affinity scamming on Bitcoin. Bitcoin is this truly innovative, life-changing technology. And everybody, all these other shit coins are basically trying to do the classic, I love Bitcoin, buy my shit coin. They are presenting themselves as being related to Bitcoin or somehow like Bitcoin. Ethereum is the classic, anus through which all the other shit coins are birthed into the world from. They have changed their narrative so many fucking times. The most recent one that is popular is this idea that ETH is going to be ultrasound money. And they're just changing the narrative over and over and over again to try to basically stay relevant and to get people to dump their bags on. And I wouldn't care if these things were presented as what they are. These are like, hey, like these are, they're just like, things that don't necessarily have any actual value. They're speculative. Maybe they'll be worth, maybe the technology that they are claiming to implement will someday come to fruition, but it's not here now. You are speculating on a possible future rather than it being presented as like, this is a fait accompli, it's a done deal, this thing exists, it's valid, and we just see it over and over and over again. And it's super disappointing. Not that people are buying it, though that is disappointing to me personally. It's disappointing that these people who do this professionally, that spin up new tokens constantly, are able to continue to do so, and that the people just don't catch on, which is why on this show, on so many other incredible Bitcoin focused people spend so much time and effort and energy shitting on all these other projects because they are scamming people out of their hard-earned money. And it is absolutely tragic. There are posts all over Twitter of people that got fucked over with Celsius and Celsius token, like literally being on suicide watch. Like that is fucked up. And that's why we are here yelling about it so often. It's bad news. Let's talk about Nancy Pelosi.
Okay. So last week, Nancy Pelosi bought some call options on NVIDIA. So a call option means you think stock is going to go up. NVIDIA is one of the largest chip manufacturers in the world. They make microchips for honestly half of the computerized items in your home. Like that's how much their reach is and how large this company is. She bought them on a Thursday. On Friday, she goes to the press and says, the chip manufacturing bill is going to get through. So what happened to these call options? Well, Nancy Pelosi helped NVIDIA stock rip as high as 7% in the day, closed the day up 2.5%. She made a cool $200K in a single day, all because what? She bought the calls on Thursday and then talked to the press on Friday. But wait, as of 2 days ago, NVIDIA was up 7%. I want to check right now, actually. It pisses me off so much, but so yeah, it's holding steady. It's down a little bit, but Nancy Pelosi has made over $500,000 on a trade in less than a week. Actually, at this point now, it's been a week. So in a week, she has made $500,000. Holy fucking shit, man. Like, she had the audacity to look at the press. Chris sent me this this morning, that in a press conference, a reporter asked if her husband has ever used insider information to make his stock market picks, and she unequivocally denied it, saying absolutely not. Like, honestly, when I've said that, like, I despise Mitch McConnell. I do. I think he is the devil. But I think Nancy Pelosi, like, is, if not on par, like, truly just more despicable. Because while Mitch McConnell will look you right in the camera, look at your eyes and like see into your soul and say, I'm going to take whatever I want and I'm not sorry about it.
Wait, what has he ever said that?
Like, let me emphasize the point I'm trying to make with his like little like chicken little like.
I mean, look, he is absolutely terrifying, and we're just making straight ad hominem attacks now.
Exactly. No.
I mean,
I have nothing kind to say about either of these people, but quite frankly, these are things I would say to their face. So I have no problem saying this.
You're a fucking liar. I'm calling you out. You would never say these things to their faces. But here's my point.
Okay,
Here's my
wait.
point.
Actually, you'll like this story. So when I saw that we potentially were going to have one Texas government official attend our conference, I was talking to my dad about it, and I joked to him. I was like, if he's there, like I hopefully will get to meet him as like an employee of BTC Inc. And I'm gonna go up to him, shake his hand, and then I want to genuinely whisper in his ear, "How's Cancun, motherfucker?" And my dad had to beg me.
You are so full of shit. There's no way you would have said that.
My dad had to beg. I looked him dead in the eyes. I was like, I'm gonna do this if I meet him. And he was like, Q, please, for the love of God, smile, say nice to meet you, and ask to take a picture of him, because if on accident that man becomes president, it would be a really cool thing to say, like, hey, like I have a picture with the now, like all of those. I used to joke about how all the white kids I ever grew up with, like all their dads have this picture with Reagan. It's like everyone just went to the same like party and Reagan was there. And he's like you're gonna just be like one of those dads. And I was like, okay, I kind of get what you're saying, but it's like, so while you could try to call bullshit, like I will gladly, honestly, let's set it up right now. Mitch McConnell, Ted Cruz, Nancy Pelosi, if any of you guys want to come on Bitcoin Magazine Live, you have an open invitation. I will change whatever guest we have. You have first dibs on any time. You are always welcome to come on this show. But to finish up on the whole analogy, so Mitch McConnell will look you right in the eyes and tell you he's going to fuck you. Nancy Pelosi will look you in the eyes and be like, I care about you. I want what's best with you. While she's like literally chopping up your like extremities and like doling them out to her friends. Like, I care about you. Don't look, no. Don't look at what I'm doing. Just look up. Just look here. Just necking up. Don't look at, don't look at me chopping up your body into little pieces. Just look at me. Look at my eyes and listen to my words. That's Nancy Pelosi.
I think you're probably right. That's all I'm gonna say. You know what? I take it all back. You
Honestly,
nailed it 100%.
You know why P is a Nancy Pelosi apologist?
Oh, Jesus Christ.
P is a Nancy Pelosi apologist because he's from San Francisco. He spent some time living there, and he probably helped perpetuate and leave her in office.
No, fuck no. I just have that vivid memory of that interview she did where she's like showing her entire like freezer that's just stocked with different types of ice cream. That always blew my mind. My friends, we've made it. Thank you for sticking with us. We're going to go to a quick commercial break, and then we will be back with the one, the only, Jimmy Song.
Real quick, I just want to remind everyone before we go to commercial, buy your tickets to Bitcoin Amsterdam. Ticket prices go up tomorrow. It's going to be fun. Like, you enjoy this, come to Amsterdam. It'll be even more fun.
It is going to be absolutely incredible. You are, for the first time this entire show, 100% correct, yeah.
Bitcoin
We'll be right
Disneyland,
back.
but in Amsterdam. is up, guys? Thank you for sticking through the commercial breaks that we've had. Thank you for sticking through the first 2 hours of today's episode of Bitcoin Magazine Live. And now I'm excited to introduce our guest for today, none other than Jimmy Song. Jimmy, thank you for joining us. How goes it?
It goes well. I just came back from El Salvador teaching some people there Bitcoin programming. So it's good to be back home and here with you guys. Of course, I had to come back in time for that.
I appreciate you cutting your trip to El Salvador short just to grace us with your presence. How was it, man? We saw some pictures. You were down there with Max and Stacy, and talk to us a little bit first about just what does El Salvador feel like in a bear market?
Well, it's interesting because, and this was something that I was telling Max and Stacy. I was there 6 months ago. 6 months, things have changed. Like you can see things being built and stuff like that. There are like bike lanes there now, which weren't there before. They're like, yeah, they put this in last week. It looks really nice. Everything is, brand new, going up, and things are building. And you can just sort of see in the country that there's a lot more energy, a lot more building, and it's what you would expect it to look like if it wasn't bogged down with different forms of oppression, I guess, whether it's the IMF or the M13 gains and stuff like that. So you can kind of see it. As far as Bitcoin goes, there you can still pay for stuff in Bitcoin, and it's pretty cool. I think there were a lot of people that sort of expected it to become like a libertarian paradise overnight. It's not quite that fast, but I mean, it's becoming something pretty quickly. I like being there. I was there to train some programmers because, as you know, we need more programmers, and El Salvador needs more programmers. It's interesting because like you don't get to see the day to day, but when you visit, you can clearly see progress, and that's what I saw.
We hear a lot around this conversation that the people who most need Bitcoin today can't afford these 80% drawdowns. You've been to El Salvador before. They're now dealing with, that 80% drawdown. I believe, don't quote me on this, but maybe it was around 40K when you were visiting. We're down in the low 20s right now. So even a 50% drawdown. Were there any concerns from El Salvadorians, or was it still like, this focus on let's continue to build this ecosystem and learn as much as we can while we can?
Well, it's I don't know if I'm the right person to ask because the people I tend to meet are very bullish on Bitcoin. So they're kind of going to be self-selected. But the people I taught were very enthusiastic about Bitcoin and so on. So I would say that, as there's still a lot of enthusiasm for it, and there's a lot of people wanting to build. There's the government is still bullish on it and everything else. They're taking care of some other problems first, namely the gangs. I think they've arrested something like 40,000 gang members, and they're no longer sort of extorting money from like the pupusa vendor or whatever. And that's a very good thing. It's adding more money to people's pockets and getting rid of these sort of like extortionists / rent seekers.
I think it's a very interesting thing that, a lot of Western news outlets will try to portray Bukele as this authoritarian leader when in fact it seems like it's just trying to combat corruption in his country. So remains to be seen how things pan out. Let's talk a little bit about just sort of.
Wait. I do just want to jump in though. It's not necessarily that simple though, right? I mean, he also has said he is the world's coolest dictator, and I think there are a lot of authoritarian things that he is doing, and that he would very publicly say that he's doing.
I
think I don't know if they're like that authoritarian. I mean, putting gang members in prison is not authoritarian per se. That I mean, these are people that are going up to like the fruit vendor on the sidewalk and extorting them for half their profits for the day.
And those people absolutely should be, tried and figured out. I mean, I will say that some of the videos that were coming out, like when that initially was happening, I'm again, huge fan of El Salvador. The World Economic Forum is absolutely trying to completely screw them over. And, I think there's a lot of amazing stuff that Bukele is doing, but some of those videos that when they first came out around the gangs were seemed chilling. It was like everybody sort of like at their for being forced to crab walk and stuff, and it was weird.
Yeah, I mean, they're gonna take like the worst videos and make it seem like that's the norm and stuff like that. And this is the IMF's playbook. There was a whole thing about Pegasus and the journalists and stuff like that. You haven't heard that story anymore, right? The reason why you haven't is because they found out that some of Bukele's government officials also had Pegasus installed on them. So it wasn't their government installing it. It's somebody else. We don't know who, but it's not Bukele who's doing it. But everyone sort of automatically assumed that it was Bukele, and he's this dictator that's keeping tabs on journalists. Actually, we have no idea who's keeping tabs on the journalists, because it's not just them. It's like a bunch of Bukele's friends that have the stuff installed on them. So there's a lot of propaganda going around, and the
Absolutely.
IMF is motivated to make them look as bad as possible.
100%.
But that's not what I saw. And be careful about like the news that you hear outside of El Salvador, because most of the people that are pushing a particular narrative have an agenda. The Washington Post, New York Times, those places have a total agenda.
Absolutely.
And it's to influence DC and the lawmakers and keep this narrative of dictator alive, so that when they can, essentially keep exploiting them. Because think about it, like El Salvador has been exploited significantly. They're like just some of the stuff that I learned, for example. They are only allowed to import beef from their free trade zone, which is like the Central American Free Trade Zone. I think it's El Salvador, Nicaragua, Guatemala, Honduras, and one other country, which I can't remember. But those are the only they have a free trade zone. And then but other than that, if they want to import beef, they have to do it from the U.S. So Argentinian beef is great. It's grass-fed, it's delicious, and it's plentiful, and it's cheap. But they can't import it because they have this weird trade deal with the U.S. And the U.S. can have these like very unfair rules around stuff like that, and keep them continuing to be oppressed. And because of sort of like the relationship that it's able to enforce through the IMF loans and stuff like that, they're finally kind of getting out from under it. And this is kind of what happens. I like the beef that I ate there because it was mostly from Nicaragua, but I would love to eat like Argentinian beef. That's like top-notch stuff, like why isn't that available? And that's not the only one. There's all sorts of stuff, particularly around fruit exports and stuff, which the U.S. totally takes advantage of. So, I mean, there's a reason why there's this narrative of Bukele is a dictator. I will tell you, though, that there are 6 million people in El Salvador. There are 3 million outside of El Salvador, most of them in the U.S. And Bukele has as high or higher approval rating among the diaspora than he does at home. So that tells you something. That's not the case for, Raul Castro or, Chavez or whoever, that's a very, very different thing.
Absolutely.
I think also, and I don't want to go too into detail because I candidly, I'm admitting that, and maybe this will hold me accountable. I'm trying to do some research on a potential article, but there was a big narrative about 20 years ago that the president of Singapore was this authoritarian leader who ought not to be trusted and we shouldn't be doing business with them. And, if you had invested in Singapore and their growth 20 years ago, you would have made a very, very good bet. And I candidly think the IMF is running a very similar playbook against Bukele and El Salvador that fast forward in 10, 20, 30 years, people are going to be like, oh shit, El Salvador was a no-brainer, just like doing an investment in Singapore now. I mean, at this point now, Singapore is almost overdone. So I do think that there's a big narrative. There's that chart that Bloomberg posted of the 19 next countries that could default on their debt after what we saw out of Sri Lanka. And top of the list is El Salvador. And I can't help but chuckle. I can't help but chuckle and think like, oh yeah.
What debt are they defaulting on though? That's the key difference. So if they default on the IMF debt, they actually can kind of afford to do that because then they can go and raise money using the volcano bonds. And that may be the direction that they go in, because IMF loans come with a lot of strings attached. You have to spend money a certain way. You can only put a certain percentage towards infrastructure, for example. And for whatever reason, a lot of the leaders in countries that take IMF loans end up embezzling it. I think it has something to do with the fact that it's money from foreigners, and they don't feel that bad about taking it from foreigners as opposed to their own people or something like that. But yeah, I mean, I wouldn't worry too much about stuff like that. It's what you can see on the ground is clearly that they are building, and you can see it, and it's like beautiful. I was commenting to Max and Stacy, like this hotel that we stayed at, that whole neighborhood, if you walk around, you couldn't tell the difference between that and like, a suburb of the United States, or like, LA or something like that. It's beautiful. Like it's well manicured. Like maybe the Chinese embassy has razor wire at the top, something like that. But other than that, like everything is like growing. And that's the best evidence I saw that whatever they're doing is working. Now, is it authoritarian? It really depends what you mean by that, because in a sense, the things that people complain most about are with respect to civil liberties. But I mean, like gangs that are extorting people, that's not really civil liberties. I mean, the things that usually the people in the US are complaining about are related to like okay, well, these M13 gang members, they're not given perfect due process or something like that, rather than okay, like these guys were like harassing all of these street vendors and taking half their wage every day, and now it's now they're able to keep their full wage. Like those are good things. Like if you want to call getting rid of criminals like authoritarian, it just seems kind of ridiculous to me.
Well, to be honest, like it's beautiful when you put it like that. But Jimmy, let's think about this for a second. While these criminals are doing that to the individual citizens, how is that any different than the way the IMF is doing that to the country itself, with the way they're forcing them to hey, you have to pay us in this certain way and do these certain things, and if you don't, like, we hold you by the balls.
Yeah, I mean, it kind of is. It's just that there's no real recourse after that. There's no higher authority to appeal to, basically. And this is kind of the problem, is the U.S. is the dominant. It's the equivalent of the Supreme Court or whatever. It's their decision. It's final, and that's it. And that's the situation we have. And it's going to take some time, but I think El Salvador is on its way to like actually like growing and doing some good things. And it'll be interesting to see if the other Central American countries follow, because I mean, certainly people in Guatemala are very interested. I'm sure people in Nicaragua, Honduras, Costa Rica, they're all watching. And if this volcano bond thing goes through, which who knows when it's going to happen, but I suspect somewhere around the 1 year anniversary, which is around September. They're going to have cash without the IMF's assistance, in which case then okay, now they can actually go build stuff without needing to stay strictly in the lane of the international monetary order.
Was there anything that this trip surprised you or stood out in comparison to the last time you went?
Well, I didn't stay very long. So I literally flew there Sunday and came back yesterday. So it was like, and 2 of those days I was just straight up teaching the whole time. So I didn't really get to go out or anything. But the the biggest things were mostly just kind of visual. Just um, yeah, things just look safer. I don't know. Like it looks more beautiful. Things are building. Those are the things that stood out to me. And I mean, granted, I stayed in like sort of like a posh area of San Salvador, but you can kind of see it everywhere. It's everything. Everyone is building. Everyone is doing more stuff because the bad guys are out. I don't know. And what the president there is doing is making a difference.
Now that you're back in America, how disappointed are you? How much do you just come back here? You're like, God damn it, I'm back to the same old shit. Nothing changed.
Well, I'm optimistic because of Bitcoin. I mean, I wrote about this in the article this week. It's there, if you have Bitcoin, you have this like sort of hope, right? Because you're not on the rat race treadmill, whatever, and instead you have the space to think about life a little more deeply and try to um, accomplish something that's meaningful rather than, hey, let's just go after what everyone else is going after, which is essentially rent-seeking positions. And that's a good thing. I don't know. I'm not really disappointed per se ever with Bitcoin because the people that attack Bitcoin, it's pretty obvious to me that they are, affinity scammers or whatever. I don't need or want their approval in any way, shape, or form. The people in the fiat world, I don't need or want their approval either. It's I feel like I have a different sort of mindset than a lot of other people because there's this thing called Bitcoin. I have savings, so I don't have to think about, okay, how can I make rent this month, or how do I make sure I'm progressing in my career in the next year that is in line with my colleagues or something like that. I don't have to do any of that. I can just continue to focus on the long-term things. For me, that's bringing sound money to the world, and that's Bitcoin. I can think about, okay, well, how can I best achieve that? How do I influence things to go in that direction? Certainly, like training developers in El Salvador is a small step in that direction, but it's something that I can do um, that maybe not that many people can. So I like thinking about those things and building things for the long term. And I think a lot of other Bitcoiners are as well, and that's what gives me optimism is that at least in this community, a lot of my friends in the Bitcoin community, like they're thinking, okay, how do I make sure that I leave a legacy so that like my Bitcoin turns into like a family that has generational wealth. My last name can be like the Rockefellers or something from 100 years ago. I mean, not like the corrupt parts, but just the fact that they're able to last and leave legacies and stuff like that. Those are things I think are more meaningful, and I don't know. It's not depressing to me, at least.
Fair. I always just love going and seeing other cultures in other parts of the world and the country. I digress, though. I think while you were in El Salvador, we were actually having this conversation. Yeah, we had it here on Bitcoin Magazine. I was like, did we have it on Bitcoin Magazine Live or Spaces? Where we talked about this idea of like, the narrative that was fed to my generation, that, your generation and the generation before you, P's generation, was feeding, saying like, you can be anything you want to be. And the idea of like dreams, and just how, unfortunately everyone just wanted to be a fucking pro athlete or a fucking famous movie star or a TikTok star. And then lo and behold, I think it was James Lavish was quoted the other day, or no, it was Luke Groman, saying that there were more individual human beings drafted into the Major League Baseball's draft than graduated with a chemical engineering degree last year. Like, that's how far we've kind of fallen, and I think that actually feeds into a little bit of what you talked about in your most recent piece, how replacing reality with fiat falsehoods destroys meaning, and just the idea of like, where is our purpose coming from, and what is real from the figments of our imagination that we've created.
Yeah, and it was a fun piece for me to write because it sort of like conglomerated a lot of the other things that I'd been writing about, and I realized like a lot of the values that we get taught are not from family anymore as much as it is fiat education. So you're taught what to believe and how to behave and what's good and what's bad from school, right? Like you're told, okay, this is what being a good citizen means, rather than here's who you are as a member of this family. That used to be a much stronger part of your identity. It really has sort of like equalized and or diminished over the years, where people don't identify with their family so much as maybe the school that they graduated from, and that's more their identity, and it gives sort of like a flavor of what you might believe and so on. And it's very uniform, it's very conformist, it's very sort of statist, and emphasizing compliance to the state, something like that, rather than, I think, a family identity, which is way more based on loyalty and love and uh, family identity, if you will, which tend to be a lot stronger as an identity, because you, first of all, you share a lot of genes and stuff like that. So it's there's sort of like a biological component to your identity that's not necessarily there when you're graduating from a class. It's not like ideological as, or it could be, but like there's sort of like a physical biological component to your identity within family that's kind of missing in fiat education. In our sort of like haste to make everything equal, we've kind of removed a lot of meaning, and it's been taken over by the fiat system to essentially make everyone like drones or something, like very compliant cogs in the fiat system. Um, that fiat companies and fiat politics, all of those sort of like are the versions of things that we're supposed to get meaning out of. And really, all three of those are very empty. They're mostly around compliance or rent seeking, or getting artificially outraged or something like that. And those are not really good sources of meaning, because what's there today is gone tomorrow. They're all very short term, very high time preference things. Whereas family, community, religion, like those have actually created things that have lasted a very long time, and it's much easier to get meaning out of those because you're contributing something to something that's bigger than yourself, that isn't going away, right? Like that's a very important and thing for most people. And writing about it and seeing how it's related to all of these other things, it led down to like this idea of the basement, the idea that fiat money is debased money, and fiat meaning is debased meaning. Fiat education is debased education. Fiat, companies are debased communities, and you know, fiat philosophy is essentially debased religion. It's very it removes sort of like the meat or the the really valuable parts and leaves you with sort of like the husk or something. And that's what I think most people find so unsatisfying about modern life.
How much like, I don't mean to harp on this, but I have a big belief that the way our education system is designed, it's designed to create these thoughtless robots that just complete tasks at hand without really thinking through what needs to get done. How much do you attribute things like our public education system to feeding and perpetuating the fiat system to then grow into exactly this, like thoughtless people who just sort of do what they're told to do because that's what you've done your whole life?
Yeah, and it's actually even worse than what you say, because it's not just about compliance to the state. It's giving you sort of like trinkets to go after. So, if you're in high school, what do you want to do? You want to get into a good college, maybe an Ivy League college, maybe Harvard, right? Like, and then once you get into Harvard, what do you want to do? Well, you want to get to the next thing. What's the next thing? Well, it's an investment banking job at Goldman Sachs, right at a college, or maybe you go to law school and try to get a position at a top tier law firm, or maybe you go to med school and get into a really prestigious residency program. And I mean, like it's not just like meaningless cogs in a wheel. It's cogs that appear meaningful, but once you achieve them, they really have very little meaning. And it's just sort of like this filtering mechanism, and it's based not on its intrinsic meaningfulness, but because of an artificial scarcity that is created by fiat money, right? Like we have very abundant money, so you have to have scarcity elsewhere, and it's in, you know, the number of doctors in the country, for example. I don't know if you know this, but the number of doctors that come in every year, so there's always like retirements and deaths and stuff like that. So a bunch of doctors go away from the market. The number of new doctors that come in, that's entirely controlled by the American Medical Association. They decide exactly how many new doctors that are going to be, and they represent the group of doctors that already exist. So what are they going to do? Well, they're going to make sure that every doctor that comes in has, or that there isn't a saturation of extra doctors. Instead, there's just enough to cover everybody because they don't want any doctor to go out of business. Of course, that's like a horrible incentive because, in a sense, like if you have a bad doctor, like it's kind of hard to get rid of them, and there isn't as much competition. And we think about why healthcare is so messed up. That's part of it. It's if everybody got to be a doctor that wanted to be a doctor, this would be a very different market. But that's not the case. It's a monopoly controlled by a single entity. So you have this sort of like artificial scarcity created by the fiat system at all levels, whether it's college or fiat companies or these extraordinary like achievement things. And the ironic thing is like the people that get them feel so proud that they have, right? Like the PhD from Harvard or whatever, it's considered super prestigious or whatever. But like most of those are actually like the most rent-seekiest of the rent-seekiest. And like they probably have tremendous amounts of ability, but it's being channeled towards these fiat games rather than to the market with entrepreneurship and stuff. Like you have all this talent and you're gonna spend it like doing postdoc after postdoc and academia rather than like trying to invent something that might be useful to the market. Like this is why the fiat system has been so draining to everything. It sucks the creativity and energy and life out of almost everything, including the very people that it's supposed to help. through fiat education and fiat companies and fiat politics and everything else, just like demotivates them tremendously, puts the wrong incentives in front of them, and makes them play games that really people don't want to play, right? Politics. And I mean, if you're an academic, you're writing grant proposals all the time. You're spending like many months writing a freaking grant proposal rather than doing the thing you love, which is trying to figure out, expand the limits of human knowledge. This is and if you're in a company, if you're a coder in a company, I can't tell you how many times I had to be in useless meetings, not getting to actually code or write software. It's arguing about what features we should have and whatever. I mean, this is what fiat things do: is it sucks the life out of them.
You mean to tell me that staff meeting that could have very easily just have been a meeting or an email? That's a good use of your time, effort, and energy. I fucking used to hate that. I actually like sidetrack a little bit, but like in my fiat days and my fiat career, like it was honestly before COVID, attendance in the office was mandatory for 99% of jobs. And I remember once I became an agent and you now had access to your computer out of the office. I got my laptop set up to where, okay, now I can access like the softwares that we use in the office on my personal laptop. And there were a couple of days where I just got pulled into all these meetings on the other side of LA. And I was like, dude, I can either drive back into the office or I can just start working remotely. And my bosses signed off on it. And then there were days where I would just go home at 2 and I would just work from home. And the first day I just worked out of the office, I'm rolling calls with my assistant and it's like 4:30 and I'm like, wait, did we just finish everything for the day? And she was like, yeah, like at this point, you've actually made calls and done stuff that are supposed to be done next week. Like we're going ahead. And I'm like, see, this is what happens when I don't have everyone like swinging by the office, asking like, hey, like, how's Bitcoin doing? Or like, who should I start on my fantasy football team? It's like, fuck, I get so much more shit done when no one's around here trying to fucking talk to me. But apparently that didn't mesh well with the company culture and the environment. It was very much like hey, don't work hard, but don't work too hard to where you make everyone look bad. Fucking stupid ass, dumb ass. I'm still salty.
Yeah, I mean, and you kind of should be, because I mean that sort of sucks the life out of you, right? Like when you have these like political things that you have to deal with, it like drains all motivation from like your normal work, the actual productive work that you ought to be doing. And this is the fiat disease. It's because of the presence of the money printer, because of the Cantillon effects, politics just becomes way more important. And entire companies are sustained by sort of political maneuvering and so on. So I mean, think about like every airline. I wrote about that a while ago, but they've all gone bankrupt multiple times. The only reason they exist is because of government subsidies. But that's also why they're so poorly run and why we have all these delays. Like I flew back yesterday. We had a 3-hour delay, and the flight attendant told us what happened, and it was like one bureaucratic mess after another. It was delayed 3 hours because the plane that was supposed to get to San Salvador couldn't take off. And the reason why I couldn't take off from Miami was because the pilot's seat spring was broken, so they had to replace the entire seat. Now, I'm not a pilot, but I think you can fly with a spring, and maybe fix that overnight instead of like delaying everybody. But that's what they had to do. And then they found another issue. There was like a dent in one of the propellers, I guess. Well, not the, it's a jet engine, so it's a metal part that had a dent, so they had to replace that. But that wasn't the problem. I mean, they should do that, of course. The problem was that they filled out the paperwork on how they completed it incorrectly, so that caused another hour delay. And then at that point, the pilot had worked some like 15 hours in a row, so there's like some regulation that says you can't work more than 17, and the flight would have taken 2 hours. So like it would have gone over the limit. So they had to call in another pilot. That took an hour. And then there were flight attendant union rules, which said that you can't work so many hours in a row. And two of the flight attendants would have worked too many hours in a row. So they had to be flown back according to the union rules, and they had to get, so all of that took like 3 hours, and it wasted a whole bunch of time because of all the fiat regulation stuff, right? Like, and this sort of stuff is so typical of anything fiat related. It's all political. There are sort of like kind of weird rules that waste a lot of time and things like that. And that's kind of what it comes to. It's a sad state, and it drains all meaning. It drains life. It drains like motivation. It's no wonder people are depressed. You get stuck in like sort of weird red tape, and you stay in sort of like you get into more and more of a Kafkaesque world. It's it gets very depressing.
Let's keep diving down these rabbit holes. Like you you brought some sort of parallels to, I want to be careful how I say this before YouTube shuts down our account. A European quote unquote power that came to be in the 30s into the 40s that was maybe the enemy of World War II, and draw some parallels to what they did, to what some of the decisions, not all of the decisions, just some of the decisions the US government is making. Can we unpack this a little bit and dissect that?
Just what I mean, essentially what the US is becoming is it's becoming more of a centrally planned economy, and we're going in that direction. And typically this is called socialism, and this is from Karl Marx, who said that after capitalism there would be socialism, and after socialism there would be communism. And socialism is usually understood to be like the USSR or something like that, but actually there's that's just the leftist version of socialism. There's politically right versions of socialism, which a lot of people call fascism, but it's the same. It's uh, government control of corporations rather than like direct government control of everything, which is more the leftist version. And honestly, that was what Nazi Germany did. That's what a lot of other countries did. And US tends to go more in that direction. You don't need to look much further than the healthcare system. There's a whole bureaucracy that is health insurance, and these are there's like 6 giant conglomerates that control most of it, and they're like sort of a tax that you have to pay if you want health care at all, or even if you don't need health care, you still have to pay them. It's this very very strange system, and it's set up that way because it's a form of central planning, and that's unfortunately the direction that the US has been going in ever since 1971, or even before that, I guess the beginning of the Fed and so on. Used to be very much that each state could determine what they wanted to do. Now it's all so centrally controlled that, like Caitlin Long has to sue the Fed to get a banking license. I mean, it's ridiculous. This is what central plan economies look like. And the more I write these articles, the more I realize, like, every one of these, it's like, okay, this is exactly what Soviet Russia did or communist China did. And they're spinning it as a good thing. It's just so strange because it's so obvious that it doesn't work, but we keep trying it.
How, like, on a scale to actually, I'll simplify it. On a scale of 1 to 10, like, current laws and regulations in place in the US, how socialist are we? 10 being the leftist paradise of the USSR, and 1 being communist China.
Wait,
I don't know if that's actually a fair scale. That's not the right scale.
Both ends of the scale are like super socialist. So
You're right. You're right. I retract. One being the free market, pure capitalist market that we do not actually have. Sorry, did I put bias in that?
Yeah. So I would probably put it at like 7. It's pretty controlled economy, and we don't have anything like the anarcho-capitalist libertarian paradise that I think would be a 1 or something like that. And we're not anywhere near it. Maybe like 1880s, 1890s, we were like 4 or 5, 3 or 4, somewhere around there. But right now, it's gone way more towards socialism. Yeah, and that's it's we're nowhere near that.
What are things that you are keeping an eye on out of any government officials, whether it's federal, state level, or local, that would be a step towards that number 10?
Well,
when are Jimmy's warning flight lights and sounds going to go off?
yeah, universal basic income, universal health care, universal housing, a CBDC. Yeah, most thing, whatever you're getting for free, it's going to require a lot of coercion in order to get, right? So, um, if you have free healthcare, for example, or the government says you have a right to healthcare. Well, that means that somebody has to provide that service. How are you going to force them to provide it? Especially if you don't have enough labor. This is what every country with like socialized medicine ends up being is they don't have enough doctors, or they're not paying them, or it's all centrally controlled. So the doctors are always like, "Hey, what the heck?" and not getting paid enough. So they'll move to the US, ironically enough, because they could get paid more. Why would you stay in a country that's not paying you very well, and where you're essentially forced to work for a wage that's not really voluntary? Um, there's coercion involved whenever you're giving stuff out for free, and that's the other side of the equation that I think a lot of people don't realize. And the thing is, these things aren't free anyway. I don't know if you remember during COVID, but it was all these people that are not taking vaccinations, they should we shouldn't let them into emergency rooms. We shouldn't treat any of their wounds, and we shouldn't give them any health care. It's like, yeah, this is exactly how free stuff becomes like a mode of compliance. Is if you don't do what we say, we're going to take stuff away that is supposed to be free. Um, and I don't know if I told this story on the show or not, but it's probably worth telling again. I was talking to Tae Young Ho, the North Korean defector, and I was asking him, "Hey, how did North Korea come into, or how did Kim Il Sung like consolidate all this power?" He said, "Just gave stuff away for free. That's what he did. At first it was healthcare, then a guaranteed job and housing, everything else, and he gave it all away for free. And of course, in order to build all that stuff, you had to draft everybody, and everyone became essentially a government employee." And at that point, it was okay. Well, you can have free housing, but you have to do what the regime says. And if you don't follow our rules, then we're going to take your house away. We're going to throw you into a prison camp or something. And that way lies tyranny. And if you're talking about stuff like universal basic income, well, it's clear who's benefiting, but who's hurting? Well, it's everybody else that gets diluted as a result of all that money that got printed, or the people that got taxed to pay for it. And that's where coercion comes in. You can't give away free stuff unless you take it from somebody else, or you coerce somebody else into providing that service. So that for me is the biggest indicator of the march towards uh, the communist socialist way of government. And that's not a happy place to be. And ask anyone that lived through communism. It's not good in any way, shape, or form. So yeah, that would be my major indicators. But yeah, it's all the it always comes with sort of like good sounding rhetoric. Don't you want healthcare for everybody? Don't you want everyone to have their own house? It's like, yeah, those are good things, but who's providing them? That's the thing. If unless you can conjure it out of thin air, which you can't, you're either stealing from somebody or you're forcing somebody to do it. You can't do that, and you have to look at the other side of the equation. And if you're not taking that into account, then you might be a socialist.
I'm not feeling spicy enough to bite. But I do want to touch on and maybe ask you just sort of, we had a long conversation with CK yesterday about this idea that, Bitcoin succeeding it can either fully succeed or it will fail. Where it sits right now in this sort of like middle, maybe, along with all the other crypto bullshit, and gold is still being talked about, and then you have fiat just running rampant. It won't exist in this ecosystem forever, but it can really only exist in an ecosystem where it is the ultimate thing or it just fails utterly. I want to focus on when it actually comes to coming into power. One of the things we talked about yesterday was this idea that in the fiat system, people hide so much wealth in their houses. And, the idea that he continued to push that I don't necessarily agree with is, the cost of housing will become much cheaper as a result of moving off of this fiat standard and moving on to a more Bitcoin oriented world. Do you agree with that type of sort of through line that, housing in general can become more affordable once we remove ourselves off of this fiat standard?
Yeah, absolutely. And I mean, you really don't need to look further than like a place like Vancouver or New York or Toronto or something like that. Large number of those houses were bought by Chinese people that are trying to store their wealth. If you remove more that demand, that like store of value demand, and they're buying it because they don't think their cash is going to hold their value, whereas real estate is. If you remove that demand, then of course, like the price drops, right? And you probably don't have nearly the supply either, but like it'll be a lot more affordable. One of the things about real estate, though, that really rankles me is just how regulated it is, but at the same time, how sort of like cheaply everything is made. And this is something that I touched on in the fiat real estate piece. But so much of the real estate right now is like not built for permanently. I mean, it's you look at medieval stuff, it's a lot of that stuff has lasted because they built it out of stone. The homes that we live in, it's gonna last maybe 25 years, and then it's gonna be crushed because somebody wants like a newer designer thing. It's kind of like wasted work, right? Like if you can have a house that can last 100 years, all the rebuilding, all those materials and stuff can go towards something else and build something cooler. And we're not really like expanding technology or anything like that. I mean, maybe there's a little bit on the 3D printing side or whatever, but because of this artificial demand of real estate, there's not really that much incentive to optimize things very much because everyone's making money. And this is the thing, like the analogy I'm going to give is like compare this to Bitcoin mining, where if you're an inefficient Bitcoin miner, you will go out of business. If you have to be like sort of hyper efficient and very, very good at what you do in order to survive. As a home builder, you don't actually need to be that great. Like you just because there's just so much demand, you could just sort of be like mediocre and still make tons of money. There's not enough pressure to optimize or innovate or make things more efficient because the way that real estate is, it's heavily regulated, so you kind of have to build a certain way, and getting a permit, for example, to do like a 3D printed house is like going to be very, very difficult in almost every jurisdiction because the people in charge won't want it like that. There just isn't that much room for any of that because there's all this artificial money just sort of coming into real estate. So all of that combined, and despite all that, homes have at least like building materials and technology. I mean, people live in like much more per person square footage than they were like 50 years ago because that's the thing that's most important to them. There is some innovation there. There could be a lot more innovation, I think, as you sort of optimize and put natural market forces toward it. And yeah, I think it'll get more affordable on two fronts. One, it'll be more affordable because there won't be the artificial store of value demand. But there's two, there's this other sort of direction of innovation and better materials and things that last longer and things like that, which come as a result of a more Bitcoin standard. People are just not going to pay for crappy built houses. They're going to pay for the ones that are going to last a long time and that they can pass down to their children. And I think those are the two sort of like opposing forces that eventually make housing way more affordable than it is now. PP, you're muted still.
Oh my God. Thanks for letting me know. You're saying that basically as we move closer to a Bitcoin standard, there will be stronger incentive to use longer lasting building materials?
Yeah. I mean, not just like having longer lasting real estate, but also, just better construction techniques and stuff like that. One interesting anecdote that I read about recently that struck me was towards the late Roman Empire. They wanted to build like new buildings, except like a lot of the knowledge on how to build those buildings like were lost. So what they ended up doing was taking parts from old buildings and making them again to make new buildings.
Oh shit.
Like because they just didn't, they kind of stopped innovating because of all the dilution and rent seeking and all that stuff.
Wow.
Like, doesn't it feel a little bit like we're going that direction, especially with something like airlines, right? Like airplanes have not improved in 50 years, like at all. I mean, yeah, maybe you get Wi-Fi on board now, but really,
yeah, but that took like decades. Wi-Fi'd been around for like 10 years before they were like, all right, fine, maybe. If you're
but the actual planes, they don't go faster. They don't, they don't have a larger capacity. They don't like it's the same technology, right? Like and it's we've lost a lot of, and you alluded to this earlier with the petroleum engineers versus the number of people drafted into Major League Baseball. I mean, we're gonna start losing some of the innovative ideas, and like because there's so much of a brain drain into rent-seeking careers. I mean, most of them are going into Wall Street and being investment bankers instead of Lockheed Martin to improve, jet engines or to come up with a completely new design that's like much faster and runs on like a different kind of fuel or uranium or something. Like these are all possible. Just no one's. We're just completely stagnant on those fronts because of fiat money. There's a. And I imagine that's the case for housing as well. There are probably way better ways to do stuff. It's just, the people that are build exactly what they know, and that's it. There isn't sort of like innovation going into that. You're not putting brains towards that. The brains are all going towards how do I get people to click a few more ads. That's what they're doing instead of how do I make this industrial material like last longer and easier and more moldable and easier to deploy and all that. Like those are things that would actually improve housing tremendously. But instead, all those brain cells are going towards how do I extract like a few more cents from this guy, from each viewer of this article, or how do I get them more addicted to porn so they'll pay us more money, or how do I, make this game more addictive so they'll buy all the trinkets that go along with it, like that. This is what financialization does. It encourages this sort of like rent seeking behavior, which doesn't necessarily add very much. The things that would add a ton, like making a nuclear powered supersonic jet, or you know I don't know,
I
like
want that jet.
housing, or a 3D printed house that can go up in a few days and last for 100 years. Those are things that I think would be very useful, but very few people are working on them, relatively speaking. Most people would, a lot of those people are instead, hawking altcoins, or, being an investment banker, or I don't know, just very rent seeky positions that don't do anything. That's what they're focused on, and it's ultimately kind of meaningless to go do those, but they pay well because fiat subsidizes them. So that's the state that we're in.
Interesting. Well, we're almost out of time. I feel like I agree with you on a lot of what you're saying. I feel like maybe you're painting with like slightly too broad of a brush around the categories of things that are like fiat incentivized. I feel like you know what? I was going to ask you like a question that would have taken like 15 minutes to answer, but I guess where do you draw where do you draw the line? Like, how are you determining what is sort of like rent seeking specifically because of a broken monetary system, which we clearly live in one, right? Versus things that are, I don't know, like things that are basically just market dynamics. I'm kind of going in the direction of like subsidized industries, or industries, as you said, that are like bailed out constantly versus non ones. But I don't know how to draw that distinction. I'm curious if you.
Yeah, and I've thought about this a lot, and I've come to the conclusion there's not a very easy or clear line that you can draw, because everything is interrelated. The reason why people want to play video games and watch porn all day is because their jobs are meaningless and don't contribute anything, and their moral character has been debased along with the money. And that in turn incentivizes more rent-seeking sort of jobs where people are making stuff that don't contribute anything. So it's all sort of like interrelated, and it's hard to say exactly how much is exactly from fiat money, how much is just sort of like general moral character degradation from the degradation of money, and how much of it is just partisan politics, or other things, or the effects of technology, or whatever. I mean, all of it is related. I believe that character degrades along with the money. I believe that materials and everyday things that we use degrades along with the money, and everything else. So it's where do I don't really draw a line. I do know that fiat has at least something to do with all of these things, and if it's not completely responsible, it at least contributes to it significantly through sort of, at the very least, the high time preference behavior of everybody, which is the result of the money debasing so quickly. So all that is to say that I just sort of do paint it with a broad brush, because I think it's going to hit more so than it doesn't. I could be wrong, and I'm happy to be happy for people to point out where I am. But the series of articles has all been about, okay, well, let's think about this. How does fiat money affect this thing? And you can almost trace everything back to it. It's kind of sad, but it really is sort of a root of all kinds of evil.
Yeah.
All right. I think I've exited the matrix. I think I'm now back. I talked too much.
You've come back to us.
I talked too much about the Wachowski twins and I got caught up in the Matrix. But Jimmy, I do want to just I don't mean to like just go for the biggest story on Twitter, but you know we are a ratings driven show, and that's how P and I collect our sats. What was your initial gut punch reaction, or just did you laugh audibly loud when you heard about Elon Musk and Twitter selling their Bitcoin?
No, I mean, I didn't laugh or anything. It was like just sort of I think this was his move the whole time was whenever he would be in financial trouble, let's go and do this, right? Like and he expected Bitcoin to be going up in price, so he'd look like a genius, and people would be more forgiving of what happened. But he had to sell at a loss, so he looks a little bit more foolish now. I think this was his plan the whole time was to dampen the volatility. And in actuality, if you think about like Tesla's stock price versus Bitcoin, I think he actually made out better storing it in Bitcoin than in Tesla stock. So, if you think of it that way, like the alternative, I guess, would have been to do like a buyback of the stock or something like that, which would have essentially been that. And it probably would have gone worse. But yeah, I mean, he's one of those rent seekers, I think. Like, if you think about it, he's gotten so many subsidies for his cars and stuff, and I mean, his company's not doing very well. Like they without that Bitcoin sale, they would have lost a lot of money. Of course, they also have a lot of money, but I mean, these are fiat companies. Like it's just kind of crazy. I did a calculation for Coinbase the other day, right? Like just trying to figure out like what their financial situation is, and I don't know, maybe this will get your ratings, but let's just do the math, right? They did an 18% layoff, and they gave some numbers. It was like 1,200 people, something like that. So that if you do the math, that means that they're left with about 5,000 people. 5,000 people in Silicon Valley. Now let's just like estimate how much that's going to cost. Some of them are going to be call center people, but others are also going to be like principal engineers and stuff. So I don't know, all with healthcare, 401k, stock grants, and options, and all that stuff. Let's just say that's about 200,000 per person. It's about $1 billion a year just in personnel. $1 billion, right? And that doesn't include servers, regulatory stuff, advertising. All the software licenses you have to pay, all the buildings that you're renting, all the perks that you're giving to your engineers, including the cafeteria food and whatever. It doesn't include any of that. So, and you include all that, it's like, yeah, I can see why they're probably going to be more compliant with the state going forward because they have $6 billion. But like they have a huge personnel cost. They have a lot of other costs. They've probably taken out loans and things like that. Like, I think we're kind of seeing a company turn into a fiat company in real time. And, like they're starting. There was a story earlier today about, somebody doing insider trading. I will bet you anything that this person will be punished like crazy. And they will put in all sorts of controls and do whatever the state tells them because they're going to need it. they need to comply with the state in order to have a chance at staying relevant. And this is the fate of every fiat company. Is in a sense like Coinbase was, 2013. They were like the only place reasonable place that you could go buy Bitcoin, and Brian Armstrong at that time was a Bitcoin enthusiast and stuff. He's since like sort of slowly gone down the altcoin route. And now they're probably going to become like a very fiat company. But that's sort of like the evolution of things, and that's how things happen.
So one thing, I mean, I'll just say that the thing I'll push back on, Jimmy, is I don't think Tesla is just now becoming a fiat company. To your point, like
Yeah.
They were fiat when they hatched out of the egg, and by that I mean long before Elon even purchased them.
they were forged in the fires of fiat hell. Like the only reason they've ever been profitable is because of the all ESG and all the carbon credits. And I brought this up at the beginning of the show, and this will be the final point I make before, Jimmy, I give you the last word. This is exactly what happened in the Q3 2021 earnings reports when they came in at a fucking loss and they were selling carbon credits. And the only reason they were profitable and their earnings came in profitable was because they sold carbon credits, in the same way that they would have had negative earnings this last quarter if they didn't sell Bitcoin. So the fiat company can be damned to hell for all I care. But Jimmy, final word.
Well, my final word today is, hey, like it is kind of like a weird time in our space right now, because for whatever reason, Ethereum is pumping, and I don't know. It always pains me when Ethereum pumps like this, and almost drags Bitcoin along with it. It feels like it's an artificial pump. A normal pump looks like where Bitcoin leads everything else, and then things catch up later because you get people that are FOMOing or something like that. So it's a little weird. So it's something doesn't smell right in the market right now. And I'm not sure what it is, but we just sort of have to wait and see, which is basically the virtue of every holder. You're supposed to wait and see. You're supposed to have patience. You're supposed to not get affected so much by day-to-day news like Elon did this, or Coinbase employee did this, or whatever. The key to being a Bitcoiner, Bitcoin holder, is to sort of let that all wash over you. And there are sort of things that I think would bother you if you were more anxious about things. But if you've been saving in Bitcoin, you have some savings, you have a runway, you can relax, and you can start thinking about other stuff. Like the long term, like what you're going to do 20 years from now, what sort of legacy you want to leave. And those are honestly way more interesting and meaningful questions for your life, rather than, is Bitcoin going to go up next week, which is what every show focuses on. And I get it. It's more fun to talk about that, but it's going to be more meaningful to talk about what you're going to do in 30 years. So I encourage you, all the you two and all the viewers that are watching this show, think about what's going to happen in 30 years and what sort of legacy you want to leave when at the end of your life.
As someone who is a host of a show that talks about what is the price of Bitcoin going to be next week, I could not agree with you more. That is you hit the nail on the head, Jimmy. The right question to ask is, where do we want to be in, at the very lowest, I would say a year, and more likely 30. Thank you so much for joining us, man. I always appreciate our chats.
Yeah, thanks for having me, guys. It was fun.
Absolutely. Want to remind everyone one final time that tickets for Bitcoin Amsterdam are on sale. Prices go up in the near future. The censorship-resistant issue of Bitcoin Magazine is available in, I believe, Barnes & Noble. Is absolutely incredible. If you haven't checked it out, check it out. It's our best magazine yet. Really, really fantastic investigative journalism there. And that's all we got. We will see you tomorrow, same time, same place. We're going to be doing news and notes for 30 minutes, and then we're going to dive over to Twitter Spaces and have a conversation about Bitcoin, the Lightning Network, the insanity of the Bitcoin space right now. And we're going to be having that conversation with none other than Shinobi. So it'll be a fantastic time.
I'm going to piss Shinobi off, but then also I'm definitely going to piss George off and say ticket prices are literally going up. They're negotiating right now. How do I say this? It's going to go up so much that the 10% discount code to use BM Live will not make the tickets cheaper than what they are today. I'll leave you with that, my friends. So lock them in.
First time hearing about it.
Lock them in. They're going up. It's not going to be cheap. Come party with us in Amsterdam.
Goodbye, my friends.
And Jimmy, the score of the game last night was.
We'll do that next week.
All right.
You're the man, Jimmy. Thank you.
Adios, everyone. See you later.
Bye.